Morning, everyone. This is Rajendran here, joining from Market Calls, and welcome everyone to today's session on how to observe order flow chart. So, what are the key understand? What are the key principles one have to look out for from the order flow? That's what we're going to discuss in today's session. So, before getting into the session, so let's have a quick recap on what we discussed yesterday. We discussed yesterday about initiative drive. We discussed about how absorption looks like. We yesterday discussed about how price travels in a low liquid zones and high liquid zones, and we also discussed about a couple of strategies like absorption imbalance strategy, like absorption breakout strategies, and some of the strategies like momentum auction reversal or momentum reversal strategies. And the other strategy what we discussed is the trapped big buyer or big seller strategies at the day's high or day's low. Today we are going to discuss a couple of more strategies, but before getting into the session, before getting into the strategies, let's quickly have a look into a couple of the principles which one have to look out for. So we'll be discussing in this session about what a strong auction looks like and how what a weak auction looks like, and what the high volatile zone looks like, and low volatility candles looks like, initiative drive, responsive auctions, delta unwinding, delta positioning, and liquidity, especially. So we almost talked about this yesterday, and a trap buyer or a trap seller, exhaustive high or an exhaustive low, high volume area, low volume area, how does it matters a lot, right? So that is what we are going to look into, and these are the basic foundations um, for developing any kind of strategies, right? And yeah, before just getting into the session, just give me a quick information about the audio and video quality. Is everything is good, so that we can start with the session.
It's good,
Oh,
Raj.
yeah, okay, fine. So I am at my home, so I guess we won't run into yesterday's kind of issues. Usually I don't find any issues when I'm sitting at home and I'm doing any sessions. So let's move on. So strong auction and weak auction, it's one another way. It's a very basic foundation to understand how the interaction between the buyers and sellers happens. Strong auctions are characterized with auction imbalance, right? And typically one time framing, and typically high volume and high delta. So these are the characteristic of an stronger auctions, right? So the weaker auctions will have overlap in the price rotations, typically low volume, low delta. So if you move, let me move. Uh, the price itself, one time framing for, you see, when I say one time framing, what does it mean here is that the price here just continuously keeps making a higher high. Right? It makes higher high and higher high and higher high and higher high. You see that the delta transactions are turning into a higher delta. So not much of delta over here, but higher delta over here, higher delta over here, and higher delta over here. This is we called as a delta candle. Right? The delta candle is positive. That means more number of buyers are in that particular candle compared to the number of sellers. Right? In fact, you can visualize in the form of a delta values over here. So here is the delta values over here. One can visualize in the form of delta as well. But delta candle will have more visual. It has a better visualization. For example, let's say a candle over here. Maybe let me go back to the whiteboard and I'll show you. So let me take an whiteboard. Okay, so here, let's say a 5 minute. Let's take that we are in a 5 minute time frame charts. Let's assume that it's a 5 minute time frame charts, and one of the 5 minute candle, one of the 5 minute candle. So I'm just showing how the candle would have been went up. This is how a typical 5 minute candle would have been went up if you take this entire block of 5 minute activity. This entire block of 5 minute activity, it would have been went like this. But the same way, if I start at the start as the starting point, so here is the starting point, here is the starting point. The same way I try to measure the delta. The delta, initially it starts at 0, it starts at value 0, and typically it also go to a maximum point, and then it also went to a minimum point, and then it does something, and then it also has a delta close. So it's a delta close. This is price, This is delta. So this is the closing value of the delta, and this is the maximum price it went, that is high. So max, maybe I'll try to put over here the max value, and here is the min value. Okay, here's the minimum value, and similarly we have a high of the candle over here and low of the candle over here, and the opening of the candle over here, right? So sorry, I'm just drawing with my hand. Yeah, opening of the handle over here. So the max delta and the minimum delta, right? So the max delta and minimum delta plays a key role over here, and on top of that we have one more strategy developed. So I want to talk about that. So and the closing delta is what one we get in the table, right? The close of the delta is what we get in the table. So let me flip back to the screen. Yeah. So if you go back to the screen, you might find a couple of values over here. One is the delta, the second one is the max delta, and third one is the min delta, right? So these are the three components. It will be always present in my system, and along with that I'll have volumes on my down and cumulative delta on the downside. So I prefer using delta on my screen. I'll be having delta on my screen, delta as a table, and second one is max delta, and min delta, and cumulative delta, and I also have volume in my screen, right? So all these components are essential key to determine what is happening in the markets and what kind of players are getting through the markets. So in this case, price is rotating up, and higher volumes result in bigger delta values, right? So that's a kind of a strong auction. One should not fight the auction, especially kind of a one-time framing situations. And the second case, so this is also again another case where you can see price is one-time framing down. It is continuously tripping lower and lower and lower. It's continuously making lower highs in each and every candle. And if you look into the delta also, the delta candles over here, you can see continuously it is printing bigger red negative deltas, right? So again, this is again an kind of a strong auction. But if you try to read delta alone, right, so you might at times you might get mixed values. Some even there are bars. Even there are cases like bars which hits a day high and then it becomes a positive delta or a negative delta. For example, one of the example is called as an delta divergence. I'll show you how the delta divergence looks like. Then we go back and see how the delta divergence, how one can spot the delta divergence. So let's get back to the charts here. So let's say there is an 5-minute candle setup coming in. So this is my 5-minute candle setup, 5 minute. Prices keep going up and it's going down and it's going down. There are cases what happens, it might be hitting a new high. It might be hitting a new high, and one of the candle, this particular candle, where the delta, say if I draw a delta on the down, the delta would be negative. So it would be having a negative delta here. This will be having a negative delta. We'll be having a negative delta value over here. Whereas the delta here, it could be positive. If I measure the delta of this candle, it could be positive or negative, something else. It could be negative here, or positive over here. It doesn't matter, but whenever it's hitting a day high, a new fresh high is hitting a day high. It has a negative delta, then that means it's kind of a delta divergence. Right? Typically, for example, maybe this is also one sort of a new high. Maybe here also delta turns negative. Then this is also comes like an delta divergence. Typically, the market delta kind of software they give us an add-on where you'll be getting signals. But there are many cases where you can find it might be hitting a day high and then it delta forms negative. So it's not a so reliable signal, but where the delta is forming, that's what really matters. If you're going to look into delta divergence across all the places, it is going to be an bigger headache. So I would not advise you to play the delta divergence because it is kind of an simple signals. But where one should play the delta divergence, especially one can play the delta divergence, especially when let's say one of the candle, let me clear all those things. Let's say one of the candle is having a bigger volume. The candle is, it's a 5-minute candle. Assume that it's a 5-minute candle. Delta is high. Say that we have a high volatility candle. And we have a good swing. And let's say volume also high volume in this transaction, and higher imbalance. And at the same time, let's say the candle also running through higher delta value. So in such a case, let's say the imbalance is coming in this zone. A lot of imbalance you are seeing in this band. A lot of buyer imbalance over here. And the candle is pushing up. So maybe previously there was a good swing. There's a good upswing coming in, and good imbalance is also happening over there. But if you look into the next candle, would have been done something like this. Like it would have been tried to go up. They got a moment of exhaustion and then came back in. Here it's a big delta. The delta is positive here. It's big positive, and followed by that, probably this is day high.
Hello.
Yeah, Shankar.
So please repeat higher balance. It was a voice disturbance was there.
Okay. What I'm trying to say is that let's say we are seeing a big high volatility candle. You able to follow me?
Yes.
Yeah. So I'm talking about a high volatility candle, and previously we have a very good swing, right? So very good swing, and in between the candle you can see there's a lot of patches of imbalance coming in. A lot of patches of imbalance, like positive buyers are driving the price up, and it's an initiative drive. In fact, it's an initiative drive. It's an initiative drive up. Initiative up, we can say here. An initiative up, and then price used to keep going up. So the very next candle, you can see, and it's hitting a day high. It's a pretty small candle, but the delta turns negative. Kind of a delta divergence. It becomes a delta divergence where the delta becomes negative. Right. So Pradeep, you have a question? So let's say delta turns negative.
Sir, what is cumulative delta, sir?
Which one?
Cumulative delta.
Cumulative delta is like the delta getting added for the day. It's a delta for the day. So each and every candle, the delta will be calculated, right? So overall, the cumulative delta sums up all the delta and finally tells whether it's a buyer or a seller for the day. And as the day keeps on moving up, the delta will be, if there is a positive delta, that will be added to the previous value. If the delta is negative, it will be subtracted to the previous value. And then if you find that the delta is keep on increasing, that means more and more buyers are flowing for the day. I mean, aggressive buyers. When it's aggressive buyers, means let's say the delta is middle of the day. There was a lot of background noise being generated to me. Please mute. So if the cumulative delta is getting generated lot of negative for the day, that means aggressive sellers are in control. If the cumulative delta is getting more and more positive, it will be going to be more and more buyers for the day. Right. So anyways, let's stick to the topic. Right. So we are talking about delta turning negative at day high. day high, and that is delta divergence, right? That is delta divergence. So in that case, one can look for a momentum exhaustion pattern, right? So anyway, we'll be talking about a couple of momentum exhaustion pattern. It's called as an exhaustive high or an exhaustive low, where one can look for an scalping mean reversion opportunity.
No, do you mean to say whenever it is a higher, delta will become negative?
Whenever it's hitting a day high,
Yeah.
a fresh day high or a fresh day low, you will be seeing an exact opposite of the delta. That's we call it as a delta divergence. And there are we also look into cumulative delta divergence also. Anyways, we'll talk about that. First, we'll look into this context.
And in between, not only day highs, in between highs and lows also will be negative.
Yeah, it will be negative, but we don't care about those.
Okay, right.
Yeah.
So the delta negative can turn in a green candle also.
Yeah, green candle also it can turn negative.
So how to know about exhaustion, sir?
Let me talk about it. So otherwise, you're gonna keep asking questions. I'm not going to take the day session.
Okay.
Right. So I'm going to talk about everything. Let me talk first, and then we'll take questions.
Okay.
So there is a question from Pradeep Shankar. Is it still people are facing voice issues? He said there are voice issues. Is it?
Now and then, not now, but earlier. Okay.
Okay. Okay, so let me show you how one can see the delta divergence. Let me have a check here. Let me switch back to the screen. So to look into the delta divergences, all you need to have is, so one can spot from the order flow itself. So the top one is the delta, the top candle, the top table over here. So this measures the delta. This measures the delta. Right. Let's try to find where we are able to spot any delta divergence. So first requirement is that the candle should hit day high or a day low. So look at in this case, the candle was hitting day low. So this particular candle was hitting day low, and or not this one, not the day low. Much. Only let me take a 3-minute chats to take a closer look. Not much of delta going negative with the day high. How about this one? It's mostly positive.
Hello, sir.
Yeah.
At unsecured high, we can spot one, sir. You can have a look at it. Thank you.
1 second. You're talking about this one? No, there is.
No, it was mentioned as unsecured high somewhere. I just spotted one.
So unless it is automated, it's tough to visualize it. So this is also here.
I think at 1425 somewhere. Yeah, that's where I saw a KK period. You can see the red delta negative.
Here, this one. No, it's not a day high. It's not a day high.
Okay, got it. Okay.
Near to the day high, delta is turning negative, but that's not an.
Okay, sir.
So typically, I believe. I mean, recently there are no such examples in Bank Nifty. We check if I'm able to get. This is pretty close to the. Not much here as well. So typically, what? Let me check.
Sir, hello.
Yeah.
Can you check India Bulls housing finance chart? It's there in that on 10 o'clock candle, 5 minutes candle, delta divergence. And it was a day high and stock turned negative.
No, let me check from this. If not, I'll look into the India Bulls chart. So let's just. And of late, there are no delta divergence recently, at least. Almost every candle at the highs are. How about this is the day low, and still the delta is negative. Yeah, here. There's one case where I'm able to spot out. There is one delta over here. So look into this candle. This candle was hitting a day low, right? And the delta is positive, right? It's a day low, and then it is hitting. So it's one case where we can spot and delta divergence. Let's say. Able to get it? So it's hitting the day low, while it is hitting the day low over in this candle. So this candle, the delta completely turns positive. This is a 3-minute chart we are using it. Yeah, somebody is having a question. Yes, Pradeep. I think 22nd at 12:30 and 22nd. Okay, 22nd 12:30 where there is a delta divergence. Let me check out. So this is one delta divergence I'm able to spot out. Right? So the other delta divergence, 22nd 12:30, right? So clear that. So maybe I take a snapshot and post it in the Slack so that we can. So I'll mark this as a delta divergence. Delta divergence where it is hitting day low, and delta turns positive at the day low. So it doesn't matter whether it's a green candle or a red candle, but at the day low, delta turns, it's hitting a day low, and then delta turns positive. So one of the scalping opportunity one can think of.
At 3.5, there is a delta positive, although it was hitting day low, but looks like a failed divergence.
Which one?
In the same screen, the second set of column. In the second column, like 3.5.
3.5 over here.
Between 3 to 3.5.
This one.
That was hitting day low, but delta was positive.
Yeah, that is also delta divergence. That is also delta divergence. So this is also delta divergence. Okay. So, but the thing is that we don't. Otherwise, you would have been automated by now. It's a very simple rule. Many times you would be looking for a mean reversion, and you have to take a stop over here, and then it got a hit. Again, 3 times in a row it get a hit, and then 4th time you might get a turn. And this is coming at the you see that it's coming at 3 to 20. So we cannot really take a trade also. Many time where you should look into the delta divergence is really you should look into the delta divergence, especially when there is a high volatility candle coming in. Like we call that as a kind of an exhaustive high. So maybe I'll go back to the whiteboard and I'll show you. So the purpose is to show how the delta divergence looks like, right? So, but really don't try to trade the delta divergence alone. It's not a profitable setup. But when you have to trade the delta divergence, it matters a lot, right? So. So this is a place when you're seeing this kind of high volatile candle and the price is hitting a day high, and there you're seeing an delta divergence. That is really one form of an momentum exhaustion pattern, right, where one can think about looking for an trend reversal over there. These kinds of setup usually comes during middle of the market. Middle of the market, what market does is like market might be mostly balancing, and all of a sudden middle of the day some news-based crash or some other all of a sudden some bad news happens and then market crashes, right? And then the price might be started balancing here, and it might be doing something like this again. And when the day low is broken and it comes back, the delta becomes negative over there, right? So I'm sorry, the delta becomes positive. So those are the places one should look for an mean reversion setups, right? So that is where one can spot a momentum exhaustion when there was a big high volatility candle. So this big high volatility candle can also become like this. There will be a big high volatility candle, and probably there will be a lot of small candles, some consolidation, mild consolidation over here happening. A lot of confusion candles over here. You can say that, right? And then it tried to hit a day high again, and that delta divergence turns negative. So that is where we can think about initiating short trades over there.
Hi, can I interrupt for a minute?
Yeah.
Actually, Rajendran, I know nothing about market profile or these types of charts. So I am very much new in these things. I am very much traditional type of trader. So this all thing whatsoever is showing over there in that particular chart of your order flow chart is confusing me. So at least start from the very basic from whatsoever there in that particular chart. At least please explain that and then continue on this. Otherwise, I am getting confused. From yesterday onwards, I am getting confused from where to where it is going, because these delta word, these all those abbreviations or what the words you are using, it is something Latin for me.
May I know what you are not able to understand from the delta?
But actually, now I understand about delta. That is the buyer and seller difference. It is delta. Okay.
Yeah.
But otherwise, all other things, whatsoever there in chart, whenever you are going on that particular chart, but I am getting confused because everything is in front of me, but I know nothing about them. So I keep on looking here and there, and otherwise, ultimately, totally confused.
Okay.
So at least start from the very basic of that, because market profile or volume profile or order flow, these are all new things for me. I am very much traditional chart reader type of trader.
See, I'm not talking yet about market profile.
No, because these things, in particular that chart, something is there on the left hand side. I do not know what is there and why it is there. Your candles, you told today that it is a this delta candle, but till yesterday I was confused why two types of candles were showing on the particular chart.
Two types of candle.
One is the particular candle where trading is happening, and the below candle which you today told, that is delta candle.
Yeah, that's what I'm starting explaining the basics, right? So I'm explaining the basics whenever it is required. So parallelly we cover the strategies also. Parallelly we cover the strategies also. Parallelly we will be covering the
actually strategies is all right, but what is happening is, before understanding strategy, I must understand this order flow chart. Like those lines over there, something written as CR. What is that? Why it is there? And something over there on those particular trading candle, some violet type of.
Okay, then I'll do one thing. I'll give a basic explanation to what the order flow charts is all about. What are the things you want to do?
Yes.
Okay, that might help you to figure out what is what. But I thought of putting the strategy first. Along with that, we'll discuss parallelly we'll discuss the basics as well. So that I thought like that would save a lot of time. Anyways.
Actually, strategy, whatever your strategy told yesterday,
so
I am totally confused. I do not know what you told, what you taught, and what I learned. I learned nothing. I'm till now I am in that particular position what I was yesterday at round 11.
Okay, got it. Not an issue. I'll discuss the basics first and then we'll move on.
Yes. Actually, we are, at least me, is very basic type of trader. So for me, these types of things, and this you told that it is from last 5-6 years old strategy or reading. And I'm already 56 plus.
I got it. Your name is Rana, sir, right? Rana.
Yeah.
Rana, the thing is that we had done some basic sessions already in some couple of times back. So I thought like most of the people attended all the basic sessions, and I thought like it could be a repeat of what I am saying again. Okay, maybe not an issue. Because we had done a pre-session. In the pre-session, we covered all those basic things. Anyways, still I'll explain it one more time for you. That makes sense?
Sure.
Right. So yeah. So this is a basic order flow blocks. One of the order flow blocks on the left-hand side, what you're seeing is called as the volume profile. So what is a volume profile? Is that it records the volume of the buyers and sellers combinedly for each and every price level. We call it as a volume at price, right? So in this case, what you'll be seeing here is that, let's say here is a 511 quantity, that 511 quantity, and if there are any volumes over here, let's say another 100 is over here, another 100 blocks over here. All those blocks will get added, summed up, and then those volumes will be represented over here. So that means this particular price, total volume of 3,019 lots has been traded. At the same time, if I try to sum up everything, right? If I try to sum up, let's say this particular block, if I try to sum up only this particular block, and that will be represented as a total volume over here, around 3,847. If you look any day's volume, if you look at most of the day's volume, let's say this is particular day's high and low, the volume will be bulged mostly at the center, and at the edges you'll be having very less and less volume, right? Maybe I'll show you once we completed with the order flow blocks. I'll show you how the volume looks like for each and every day, and it tracks only that particular days. Let's say today's volume, only it'll try to show where the maximum volume is. For example, in this case, you can see the maximum volume is over here, and bigger volume is over here. And even in this volume, the 3,036 level volume, it has been bifurcated into how many number out of 4,000 lots, how many of them are buyers, how many of them are sellers, that classification it gives in the histogram charts. So the other case over here also, you can see there is one more higher volume happens over here. So whichever is the higher volume, we'll call that as a volume point of control. That is the equilibrium point where most of the trading activity happened. And that is the bifurcation at each and every price level. The bid and ask bifurcation is also shown in the form of a histogram. That is what you see in the left-hand side. Do you have any confusion with that?
Hello, Rajendran. Hello.
Yes.
See the volume histogram shown. Is it the entire day's volume or is the visible area volume?
No, it's not visible areas volume. It is only for that particular day's volume.
It's total day's volume.
Yeah. Let's say if it is Monday, the only Monday's volume will be displayed over there.
Okay. Okay. Thank you.
Yeah. And the next block contains over here are the tables on the downside. The tables are configurable. So basically, as I said, I'll be using delta on the tables and minimum delta, maximum delta. I explained what is minimum delta. I explained what is maximum delta sometime back. And cumulative delta, again, I'll be using cumulative delta as well. Cumulative delta is the delta for the day, right? So cumulative delta, typically we don't look into cumulative delta while playing strategies, but there are a couple of positional strategies which we are looking into it on cumulative delta, which I'll be talking in the later part of the session. But what is exactly cumulative delta? Cumulative delta tracks the overall delta behavior for the day. If, let's say the day started, always the day starts with a zero delta, and as the volume starts flowing in, the delta will be getting the delta values for each and every bar. Those values will be added to the added cumulatively, and then the delta value will be displayed. So over a period of time, you'll be seeing that if the delta market is also moving up, cumulative delta also keeps moving up. That means the day is completely dominated by the buyers. Totally, you'll get to know what is the net quantity dominated by the buyers. If the cumulative delta reaches 4,000 lots during middle of the day, that means 4,000 net buyers are there in the system. That's what it means. So there are a lot of buying and selling quantity happen, but out of that, 4,000 more buyers are there when compared to the aggressive sellers. So that is the net difference between the buyers and sellers for the entire day. That's what cumulative delta tracks for each and every bar. And so you'll be having the center, you'll be having the candles, which is followed by the ladders, the bid and ask ladder view, where the ladder view has buyers on the right hand side and sellers on the left hand side. All these are executed market orders. And the delta values are also represented in the form of candles. So these are basic building blocks. Along with that, you will be having two different variables. It's called a COT. COT, it is nothing but a commitment of traders. We call that as a COT. The COT is also a calculation made on top of the delta. So the COT tracks how much it tracks the buyers and sellers pressure in another way. I'm going to tell you how this COT is calculated and how the CR is also calculated. The CR is called as a contract reversal, right? So the CR is called as a contract reversal, and again, it's also one form of an buyers and sellers pressure. Do I really consider into these type of strategies as of now? No, we are not looking into strategies as of now much, but this is one another way where we can understand whether buyer pressure, how much buyer pressure is there, or how much seller pressure is there. One another way one can understand. Right? Let me try to explain what is COT first, then we'll move on to the next topic.
So just 1 minute. Before that, can you explain a maximum delta and minimum delta? I couldn't get it before.
Okay, not an issue. I'll explain maximum delta, minimum delta, COT, and contract reversal.
Yeah, okay.
So let's go back and clear everything. So let's say, let's take a block here. Let's say this is a price block and this is the delta block. Assume that this is a 5 minute of trading activity. And within the 5 minute of trading activity, market goes, let's say it started over here, the price started over here, and it went lower, and then it closed somewhere else. Like this is the price block, and this is the delta block. This is the delta block. Same way, the delta always starts with 0, right? So for any bar, delta starts with 0, because always at the start of the bar, the buyers are also 0, sellers also 0, total number of buyers minus sellers. So as the buyers and sellers started moving, as the candle started ticking, you'll be finding that as the price move increases, the delta also increases, and delta also keeps moving down. So, but at times it will be slightly different from what the price chart looks like, right? If you track only the delta alone, delta activity keeps moving upper and lower, and finally it has a max delta over here. It forms a max delta, max. Better I'll write it out. So it forms an max delta, and it also forms a minimum delta. Minimum delta. So this will be considered as an opening delta over here, open delta, and here will be considered as a delta close. Delta close. The delta close value is what we will be getting over there, and here is the min delta. Sorry, max delta over here, max delta value. The maximum recorded delta is also captured in the table, and minimum delta is also captured in the table. Opening delta is not calculated because it is always 0, and delta close is nothing but the actual delta value which you get on the table charts. Now this is your opening of the price, and here is the high of the price and the low of the candle. So low of the candle and closing of the candle. Closing of the candle. So if I try to plot a candle for this, so the candle might be looking like it went to a high. It price opens over here, it went into a high, and then it tried to drop, and finally it closes over here. So the candle will be looking something like so. I'm sorry, it's really not like this, but it will be looking something like this. Similarly, the delta also looks something like this. Delta will be having opening and close value, and it also went to a high, and it also went to a low also. So this will be the delta candle. So delta candle looks like this, and the price based candle looks like this. So that's the one you are looking into the order flow charts in the form of a delta candle. But at the same time, when we are tracking the COT, so we have COT high and COT lows. So the COT is nothing but commitment of rates. It talks about how much the buyers and how much the sellers are committing. Commitment of trades. Right. So here the COT talks about from the maximum delta, right? From the delta max, every time the maximum delta is hitting new highs. Every time the delta hits new high, the delta get resetted, and from the peak of the value to the delta close, to the close of the delta, it measures. So it basically measures from the closing value, peak to the close value. So peak to the close value, it measures how much delta net delta has been there. So that's what commitment of COT high value plots. So COT high value is like COT high, which is nothing but max delta minus to the close. From the max delta, it starts calculating the total number of buyers and net sellers. Max delta minus delta close. You'll be getting a COT high, and the COT low is like min delta minus delta close. Right? So we will take the absolute value of it. So the value will be always positive. So when you are getting this information, then you try to plot on the charts. So the COT high here COT high here using, it calculates from the min delta to the close. How much delta is involved over here. That is the, how much pressure it makes from the low of the candle or the low of the delta to the closing of the delta, how much buyers or sellers are in control. That is what the delta COT high or COT low indicates. The purpose is to understand only the buying pressure or the selling pressure, right? So especially the same thing happens over here. Every time the price is hitting a new high, every time the price is hitting a new high, the COT of the COT high becomes 0, and every time the delta is hitting a new low, every time the delta is hitting a new low is hitting the in that candle, COT low becomes 0. Right? That means it always tracks only from the low of the minimum delta to the delta close. It tracks the final value. If that value, let's go back to the charts and look how the buying pressure or the selling pressure looks like. So let me go back to the screen. So let me show from the charts. So let's go back to the recent charts. So let's take any of the candle over here. So let's take one of this candle over here. And here, the delta value is 429 bars. It's a positive candle, right? The delta is positive. That means the total number of positive value is 429. And the maximum delta, right? So maximum delta is 484. And the minimum delta is 0. And the minimum delta is 0 means, what does it mean? Right from the start, only buyers are controlling this particular candle. That's what one can understand from here. And if you look from the COT high, the COT high is at 420. That means from the low to the close. So if you look into this particular candle, if I try to draw over here, this particular candle was going like this, like right from the start. Price opens here, it dipped a little bit, it shooted up, and then it closes over here, right? And if you look into the delta was positive right from the start. It never met the open is also the same low. So it started at 0. The delta started at 0 value, and it was hitting a new high, and then it closes over here, right? So the COT low is 420 over here. That is always measured from the minimum delta to the close, right? So that gives you the difference between the delta over here. So it's that value comes around 420. And similarly, the 114, which is nothing but from the high of this delta to the closing of the delta, is what we'll be trying to measure how much effort it has been made by the sellers, how many lots it is required to push from that candle high to the close. So again, which is nothing but the buying pressure or the selling pressure. So 114 is the pressure which is required. So in this case, you can see that the buying pressure is more compared to the selling pressure. That's the information one can get from the COT data. So the bottom is the COT low, and the top is the COT high. Any questions from this? Any questions? You can unmute yourself and you can ask questions.
Hello, 114 represents, please. 114 represents?
114 represents the number of lots.
No, it is delta by
delta maximum, right from the max value of the delta towards the close. What is the effort it has been made? The seller's
COT.
effort. Yeah.
COT, that is.
Yes. That's seller's commitment.
The COT top negative 114 and down 420, isn't it?
Yes. Bottom we call that as a COT low, and the top we call it as a COT high. Or we can also call that the bottom low as the buyer commitment, and the top we call it as a seller commitment.
Okay.
How much the buyers are committing, how much the sellers are committing.
Rajendran, one thing then as a typical candle, it shows that it opened at low and closed at mid. But if I look on this particular number, then it shows that in the actually the candle is like some closed at middle means some pressure was for seller also. But here it shows that it was overwhelming pressure of buyers only, because almost 4 times of or the 3.5 times buyers were there than the seller, isn't it?
Yes, yes.
Okay. Okay.
See, but ideally, don't look into only this information and try to understand the market will or not. So as of now, really, there are no strategies which has been developed on top of this. These are just basic information one can read. Since I'm not focusing much on this because there are no real strategies built on top of this as of now.
Okay. And one more thing, Rajendran, if this candles, these are 5-minute candles.
Yes.
If I look at daily candle of previous day, then I will get entire information that what was happening previous day, isn't it?
Yes, you'll be able to know that.
Can you convert it to just 1 day candle, daily candle?
You'll be seeing a lot of blocks. You'll be seeing a lot of blocks.
In daily candle.
Yeah. So if I go to daily candle, it creates a lot of blocks.
Okay.
So maybe it's tough to read from the daily chart because there'll be a lot of buyer seller information. So let's take a little bit of time. Yeah. So here what you're seeing is each and every day is a daily candle. And typically you'll be seeing these kind of number of buyer sellers at each and every price level. And if you want to see how many buyers committed, how many sellers committed for the day, right? So almost 6,097 lot of contracts is required to push from the top to the low to the close. It requires 6,097 lots. Whereas the buyer commitment is that price closed at the day's low, I believe. So in Bank Nifty. So it was only 397 lots. That means price closed at the day's low. So that means it almost resets at zero. From the day low, it only required 394 lots to push towards day high.
Okay, one more thing. Then this will also prove that on the very left side there is this volume profile chart.
Yes.
That particular zone where it is poking out, that is the zone where maximum activity is happening.
Yes.
Rather, traders very much committed about this zone.
Yes, this is a zone where maximum volume was happening.
So for next day, I can go with the thought that this is the zone. If it dips somewhere lower, then if I buy, it can move up to this level. So I can as a target from if it goes up, then and I short, then it can come down to up to this level. This would be my target level. Can I interpret something like that?
No, sir. If at all not, I would have been explained like that. So we don't play like that. We don't play like that. So how I am playing, I'm just trying to explain over here, and how to observe the order flow chart. That is what I'm trying to explain here. But these are all, when you are looking into this kind of information, you might be looking into a lot of buyers. So at times you might see like there is a big buyer over here. Oh, there is some big buyer. Some 13,000 lots got traded. What if it could be a support or resistance? Rather than playing like this, what I'm trying to say is that how to handle market in a very objective way so that you will not get carried with that kind of bias. We really know. So we might think like, okay, this big volume is a support or resistance, right? How I can deal with this. All I can tell you is yes. So that if I want to start now, I have to look into volume profile. I have to look into top-down analysis. I have to deviate from the topic. Is it okay for you?
Okay.
Now I'm just asking you, is it okay for you to deviate from the topic? Because we'll be getting out of the subject a bit, but yes, it will be interesting. It will be very interesting, but we'll be going a little bit out of the subject, and I'll show you that what good looks like. So this is Nifty chart, right? So let me get you the 30-minute block or 15-minute block. 15-minute block over here, and let's clear the drawings. So look into this case. So this is Nifty future charts, and somewhere in the middle there was a consolidation which was going on for quite some time. So in this zone, look into the February 11, 12, 13, and 14. Right. So if I look closely from this is 15-minute chart. If I try to plot and let me zoom up a little bit, and I'll go to this area. And if I try to draw a line between here and between this zone where most of the consolidation is happening, you could find that it draws the volume profile where you can see that the volume was maximum at this zone. Let me go back and zoom to that level. So if I zoom to that level, you can see that the price at that zone, the price behavior, here it was hitting, you see that the price exactly touches the level and it keeps moving down. Right, so it is a temporary sell-off. This is how the short-term players tend to sell the markets. Right, so eventually you will be seeing a sell-off, but eventually these kinds of levels, wherever such people are playing very mechanically, somebody is looking into that kind of levels. Right, so who looks into that kind of levels is that traders look into that kind of levels. They are trading money, they are not investing money. Right, so often price moves against them positionally. So even though it is a good setup to short over there, price tend to move down, and let's say price again come back to that level. So always it is okay to take a trade over here, but once you're seeing a movement, you should get out of the market, because today's market have a tendency to revisit back. Right, so probably from a context like this, if you're seeing that market, let me go back to the profile and explain. So these kinds of information, if you trust, you have to see quite many times. Like I can show you the similar example in Bank Nifty also. Bank Nifty, what happened some time back, similar setup happened. Let me clear the drawings over here.
So actually, I am seeing this type of chart for the very first time. That is why I am very much curious about.
I understand, but anyways, I thought of covering in the afternoon session. So now we are randomly talking.
Okay. It is very interesting one, because if somebody is managing his trade, he can very well manage that. It broke down, short there, and continuously just move your stop losses.
Okay. Okay, got it. So let's say think about this scenario. So there is some time back. Just give me a second. So think about this scenario. In this balance, price was balancing for quite some time, a lot of sideways action. And here, if you look at the volume over here, if I draw a line in this level exactly, try to draw a line here. You see here, there is a price point is getting rejected over there. So wherever the price is getting rejected, one can initiate a short over there. But who are shorting over there are mostly short-term players. So price always have a tendency to revisit those levels positionally. Right. So it's okay to short. Let's say you're finding such shorts over here. Think about this zone. It's okay to do shorts over here. Or over here, it's okay to come and short near to that level, saying that this is my resistance. But always make sure that they will come back again. Again, you are seeing such kind of levels. Again, they will come back again. More they are going to touch this level, more we are going to have a breakout. Something like that.
That is just trade management part only.
Yeah. No, it's a market understanding part. We call it as a market understanding, how the players behave. So we'll be noticing the behavior. If wherever you're seeing such kind of mechanical behavior, they are mostly initiated by the trading money. trading money is mostly responsible for that kind of activity. So anyways, we'll covering those things in market profile. So let's not deviate much from the topic. Let's go back to the order flow and we'll discuss. So are you by any chance you're not able to understand any of the basics here?
No, now it is getting clear for me.
Yeah, okay.
So can you tell me about contract reversal, sir, regarding that CR?
Yeah, CR is nothing but from the let me go back to the CR and then explain. Prior to that, I'll go and shift it to 3-minute chart or a 5-minute time frame chart. So the CR value, which is nothing but the top of the CR value, which is nothing but the maximum delta I'm just getting an echo here. Just give me a second. Yeah. The CR is also one form of an pressure value where one can look into this value here, the 863 levels, which is nothing but the sum of the delta and the initiated minimum delta over here, the 426 plus 438, right? That's what it really looks into that. Total 863. 863 is the value. And the CR is nothing but the total of the delta plus the max delta value. The max delta was 20 and 426. It really looks into the 446 number, right? So again, this is also one form of pressure which shows that whether buyers are putting maximum pressure or sellers are putting maximum pressure here. Again, we really don't have any. This is one form of metric like cumulative delta. But really, we don't have any trading strategies on top of this. The most of the trading strategies are built on absorption, initiative drive. The strategies like MR reversals are R delta. R delta looks into momentum exhaustion patterns, right? So, I guess are we clear with the basics of the charts now?
Sir, another one thing regarding the VWAP, there is 2 purple lines, no, sir? Can you explain that one also?
That is nothing like a Bollinger Band. It is nothing but VWAP plus 1 standard deviation plus and 1 standard deviation minus.
What does that mean, sir? 1 and minus 1 means what does that mean? What is that line? It's like a Bollinger Band only.
Yeah, it's like a Bollinger Band, whereas Bollinger Band is derived on top of moving average, right?
Okay.
Whereas the VWAP bands are derived on top of the VWAP levels. Okay. So if you look into the Bollinger Band is moving average plus 2 standard deviation, or Bollinger Band minus 2 standard deviation, right? Okay. Similarly, here we are having a similar kind of bands, which is VWAP plus 1 standard deviation and VWAP minus 1 standard deviation, as simple as that. Okay. Typically, I don't use it, but that is part of the charting feature. We mostly look into the VWAP as the potential targets most of the times.
Okay, sir.
And those VWAP targets, instead of looking into VWAP, there are also a couple of control settings we can go and check for indicators. Indicators will be having a control. So the value area calculation here. So what level you want, whether if you want an TPO level control, in that case, you'll be having an center as a point of control. So maybe this is more related to market profile. So now if you're getting an point of control over here, this is where most of the price got traded. So 2890 is where most of the price got traded. But what we have talked about is that the VWAP is a level where most of the volume got traded, right? So where most of the volume is getting traded, where this is how many, there are particular time period where the price is coming in. Like 2890 is where again and again more time is spending there, and more players. So that particular price on that day, price is coming and touching. So price goes up, comes down. Really, price goes up and touches the level. Again, it goes down, touches the level. goes up and touches the level. This level would have been touched multiple times. In terms of price is spending more time over there. So that that level can be plotted if you try to plot in the form of PPU. Right? Yeah, that is more related to market profile again. Now, once you understand market profile, you understand how the line looks like. Okay, anyways, we prefer VWAP while using it, and VWAP is it's an average volume, right? So it's not the more volume got traded over here. You see that more volume is getting traded over here. So if you in that case you can select volume, then that line will always tracks only the where maximum volume is happening for that day. It tracks. You can see that exactly it is coming at that high volume level. So here is a high volume level for the day, and the volume also getting plotted exactly at that level. So it tracks if you are seeing that start of the day. So during the start of the day, it's usually a line which tracks. Usually a line which tracks where the high volume is coming in. If there is a high volume is shifting, then automatically either shift upper side or on the lower side. Nothing much really, but I would recommend it to keep always as the default setting.
So contract reversal, please give formula once again.
Let me. Somebody had unmuted their mic. It's getting generated a lot of disturbance. Yeah, thank you. So contract reversal, which is nothing but so look at this example. This particular example, the 426, the value is minus 426, and then here it's again minus 437. The absolute number has been taken over here. The total of the minus 437 here is the minimum delta, maximum delta is 20. So the contract reversal on the top, which is nothing but minimum delta plus the cumulative delta. So it's 863, and the lower value, the 446 level here, which is nothing but 20 plus 426 in absolute terms. So otherwise, we really don't like to play that kind of levels much. If there are really sellers, right? So here in this case, the delta is a seller. So probably if you want to put the value like this, maybe let me take you to the whiteboard and then I'll tell you how the calculation really looks like. Let me clear the drawings. So the CR high, right? So the CR high is always like min delta. It's supposed to be go like minus of what delta close. And if the delta close is really negative, if the delta close is negative, the negative minus negative becomes positive. So if delta is negative, if delta is having negative sign, this so minus of minus delta will become minus and minus will become positive. So it becomes minimum delta plus or positive delta plus delta. Otherwise, if the delta is negative, then it becomes minus of delta. I mean minimum delta minus delta. So minus delta. Right. So that means which is nothing but min delta plus delta. If delta is positive, then you'll be getting like min delta plus minus of positive delta, which is nothing but min delta minus delta. So that's how the calculation goes over here. So all these are variants people are trying to explore how better one can manage. Basically, it's still not part of my strategy. We are also just experimenting with these numbers. If you are able to build a couple of setups, mostly we'll be looking into when the day high is hitting. Mostly we are observing as of now, if the day high is hitting, are we able to get any clues from the COT high or COT lows? Really, it requires more observation. So once we have a solid rules built on top of that, then we can come and say that, hey, this is a strategy where you can play COT high or COT lows. Otherwise, these are different ways of representations of order flow information. So these are statistics which are built on top of order flows. Right. So what we can do here, we can take a pause and let's take a 15-minute break and let's get back around 11:30. If you have any questions on basic concepts of order flow, you can clarify now itself so that we'll not be missing anything.
Rajendra sir?
Yeah.
Yesterday's recording, has it been posted or is it going to be posted later?
No, yesterday came late night, so I have to post it.
Yeah, it's fine. Yeah, no worries.
I have to edit the first some half-an-hour sessions and then I have to cut it out and then.
No problem, no problem. Thank you, sir. Thank you.
So that delta strategy, I'm not able to understand. Can you explain later?
Which delta?
Delta strategy.
Delta strategy.
Hello.
Yeah. You're talking about that delta divergence.
Yes.
Okay, so let me re-explain again here. Right, so just give me a second. Balachandran, right?
Balachandra, yeah.
Yeah, Balachandra. So there is a okay. Just give me a second. Let's say there is a big positive candle, and a lot of imbalance is getting developed. You have any questions on imbalance? What is the imbalance is all about? Let's say there are positive imbalance getting developed. Maybe I'll put a different color for imbalance. I'll take a green color and say like there is a positive imbalance developing over here, and let's say positive imbalance is getting developed over here. So prior to that, we have a very good swing high. So there is a good swing is getting developed over here, a good swing.
Okay.
And then finally, we are seeing a bigger push. A bigger push, a lot of momentum is getting generated. So all these are nothing but what? All these are kind of a momentum setups, right? All these are momentum setups again, momentum setups over here. So despite that momentum setup, it is running into some sort of an exhaustion high. I'll explain later what is an exhaustion high is all about. There are different ways one can spot an exhaustion high. When you are seeing this kind of bigger candles, and followed by that, we are seeing a delta divergence. Probably the next candle is moving like a kind of a delta divergence. We have one more candle here. Probably assume that it's a kind of a negative candle. Maybe it is running through a negative candle over here. So let's say we have one more candle over here, which runs really some negative setups. This particular candle turns the delta of that. It is coming at the day high. It's a fresh day high has been hit, and the day high's delta turns negative. So if you look into the delta over here from the order flow charts, delta at day high is negative. In that case, we call that as what? Price hits at day high. That means price hits fresh day high, but delta turns really negative. Right? So that is one form of a delta divergence. Usually, delta divergence brings short-term trading opportunities. One of the plays one can expect some immediate reversal. But if you try to plot delta divergence as a signal, like you will be getting a lot of noise. What I'm saying is that don't look into delta divergence at all the places. Look for a pattern, something like this. So there is a big delta volume, followed by that the next candle is a delta high. So one of the plays where you can anticipate a correction over here. From an intraday setup, we will be expecting corrections over here. Or there are other cases. What happens is that the same delta. So you're hitting in some bigger volume over here. Inside this bigger volume, you are really running through the same similar set of imbalances. The buyer imbalances are coming in, and what could happen is that the couple of green candles, a lot of inside candles are getting formed over here. Inside candle over here, inside candle over here, and probably again some negative candle over here, and some negative candle over here. When it is hitting a day high, again it forms one form of a delta divergence here. So it forms when it is hitting a day high again here. You can expect if you are expecting a delta divergence, then again one of the plays to look for a shorting opportunity there, and where you can expect the price to correct from there. Right. So instead of trading all the delta divergence blindly, right? So just go through some sort of an momentum exhaustion setup. So these are some of the momentum exhaustion setups. Looks like where one can take advantage of. At times it could be the days lower and days high. Typically, these are the places where one should look for a mean reversion opportunities. You understand, Mr. Bala?
Yeah, got it.
You got it. Okay. Yeah. Any other questions? Or we can really take a break. So when you're seeing this kind of bigger high volatility candle, then really you should look for MR patterns, or you should look into delta divergence. Mostly your eyes should be mostly focused on the delta values. How the delta is getting developed, how the volume is getting developed, whether it's an absorption activity is getting developed or not.
Sometimes it will coincide with momentum auction reversal also, right?
Yeah, sometimes it will coincide with momentum auction reversal also. So, but momentum auction reversal is completely different. You don't find a delta divergence over there.
Hello.
Yeah.
Rajendran, how often you have observed this delta divergence at the candle high in Nifty and Bank Nifty? What are the chances of getting it right?
So it used to come. It used to come at many places, but we don't. As I said, there are many places it used to come. So in a slow moving markets. So let's say the markets are moving pretty slowly. Something like this. Markets are moving slowly and steadily. This it keeps moving up. There are a couple of delta. In that case, what happens? Some of the delta becomes really negative here. It might go negative here, negative here. So those are the places where you'll be seeing that price hitting day high, and it gets creating a delta divergence. So really, in a slow uptrending markets, especially the trending days, you'll be getting a lot of delta divergences. So typically, those are the zones. Don't try to play the delta divergence alone. You'll be getting at least in a day, at least 3 or 4 delta. You'll be getting it in a kind of trend day like this. Probably there are many cases where the delta price will be moving up, but delta will be negative. Price will be moving up, delta will be negative. That's kind of absorption might be happening over there, maybe. And the price is moving up, delta is negative. Those are the places you'll be getting signals over there, delta divergence signals over there. Really. So in that good kind of trending markets, you might miss the game if you look for delta. But what I'm talking here is that a delta divergence occurring in these places, or a delta divergence occurring at these places after a high volatile candle is where one can look for a mean reversion setups.
Thank you.
Yeah, but don't try to play delta divergence alone. It's not profitable all the time. Yeah, maybe 30% profitable. We can say that if you're going to take about only trading delta divergence. At times in a good sideways market, you might be able to find this, like market goes up, it finds a delta divergence, again it goes down, it provides you a delta divergence, it hits the day low, again delta divergence, again it hits the day low, delta divergence. So you might be observing the delta divergence at these locations in really and sideways markets.
Yeah. Yeah, basically, I have this experience of failure with the RSI divergence with the traditional charts. I mean, it hardly works. Actually, that's the reason I asked.
No, this divergence is different. This is we are looking at a bar level divergence, right?
True. Yeah, but the concept of divergence, you have for delta, you have.
I'm not a great fan of divergence.
Okay.
So none of my studies involves divergence unless this specific patterns. These kinds of patterns we'll look into it because once I explain exhaustive high, you'll understand what kind of context we are talking over here, right? So, anyways, to talking about delta divergence, people ask delta divergence, so that's why I said like where we should monitor the delta divergence.
Great, thank you.
Yeah. Rajendran, at this times, we do not know whether it is the day high or not, isn't it? That is the main problem.
It's easy to look into that. By looking into the charts, you can say whether it's a day high or not.
No, while trading, I'm talking about.
Yeah, while trading, it's easy to say, no? It's easy. I mean, easy to look into that. Let's take this case over here.
When market is moving up and down, it can still go down. If I think suppose day low, it still goes down, isn't it?
Yeah, it still can go down.
So we cannot find out whether delta negative is at a day low or not. We cannot make out what I'm saying.
No, you can make out, but there are cases that you will get stopped out in most of the cases.
Yeah.
But if you are really looking into these kinds of patterns, so these are the patterns has a higher rate of success compared to these kind of cases. These are kind of cases you'll be getting stopped out most of the time. So the examples over here. So these kinds of examples I'm talking about. So these kinds of examples you will get stopped out mostly, but these kind of patterns have higher success rates.
Okay.
You're getting the point. So when it's hitting a day high and the candle is really turning red, and you're seeing big volatility candle in the past, and you're able to see an exhaustive setup. So it should be combined with an exhaustive setup. I'm going to explain what is an exhaustive setup later on, right? So
you're saying that 1 minute, sir. You are saying that once already hit, come down again, going to the same point you're talking about. Am I right? Day high means suppose. That day touched, come down again, going to the day high. That time.
Yes. It is making a fresh high.
Yeah.
It is making a fresh day high, and that candle is closing with the negative delta.
Yes.
That is what we can call as a delta divergence. Like price hits the day high,
yes,
and the candle delta closing is negative. That is what we call as a delta divergence.
Right.
So I think we can take another 5 minutes break, and we'll be starting back by 11:30. Right? Thank you. Till then, I'll be on mute. Okay, so let's get back to the topic over here, and we are discussing about how to observe order flow charts. So we looked really into what is a strong auction is all about, and so here is a weaker auction, how the weaker auction will look like. Weaker auction, you'll be seeing a lot of rotations, a lot of overlapping. So mostly it could be zones of consolidation, or it could be zones of absorption. When I say absorption, it really means accumulation or distribution from the institutions. Right. So these are weaker auctions, and typically, let's say if you want to identify where the bigger order flow is happening, bigger quantity is getting traded. So in that case, the Bell TPO has really a good filter. Where let's say in Bank Nifty, if you want to know where anything above 500 lots are getting traded. So what you can do here is that right click and go to indicators, and there is a control here, and where you can input the lot size. The lot size is 20 over here. I made it, and then you scroll down to the lower end, and where you can say, the bigger volume bars. It's called as a filter trade size. Yeah, here. So let's say I just want to highlight wherever there is an 500 plus volume happening over here in a Bank Nifty kind of charts. I just highlight with an thick yellow color bars. So the moment I apply and enable that volume alert, by default it will not be enabled. So wherever there was a 500 lot size is getting traded. So you see that it's get highlighted with an yellow color box which is surrounded by that volume. So if you really compress, you'll be able to see there are places where such kind of high volumes are happening over here. So really, if you compress the blocks, you'll be seeing a lot of blocks which is happening over here, right? You people are able to see it. There are many places where you can see 100, 500 lots got traded over here. So here is some 500 lots got traded, and here is really some 500 lots got traded. Again, 500 lots got traded over here. So those are the places where one block of 500 blocks, which is getting traded over there. So by that way, you can study bigger orders, how the market has impact on such bigger orders. Again,
sorry, so it's the same information that you get in the volume also, right?
Volume you will be getting for that particular candle. You will be getting some I'm sorry. For that particular candle, you might get 2,500 lots. But I'm talking about one single place, one single block where 500 lots got traded. Mostly it is some institutional volume.
Okay, thanks.
You're getting my point? So there are many places. If you look into any particular candle, so let's say this is a candle over here. I'm talking about a 500 which is happening only at that particular block. Let's say this particular block over here, the 500 is getting printed. So something like this. Maybe other places it could be 200, or other places it could be somewhere like 100 over here. But it highlights only where that particular block is highlighted, where a 500 block is getting traded, that gets highlighted. So these are the zones I'm talking about. That particular price has an 500 lots got traded. So again, 500 lots got traded. Again, a 500 lots got traded. 500 lots are getting traded. So if you really want to track the institutional volume, then there is a filter where one can apply. It cannot be done by smaller hands. Small players usually play anywhere between. Small players usually play around 5 lots, 10 lots, 15 lots, 20 lots. Right? That the maximum size, I believe, is mostly 20, 25 lots. Right? So, but bigger players, bigger institutions, if you want to track their flow, so then you can filter with bigger quantities. So wherever in one particular block where a bigger volume is getting traded, it most likely you might be able to. There are places where you might be able to observe some certain similar patterns over there. So if I compress again the chart, you can see there are many places where 500 lots are getting traded. So now you can really look into the close and you can check whether it's bigger seller, and seller. Is it something like that? So bigger players are selling or not. So let's go to this particular block and see. So this particular block, whether it's a buyer or a seller. And then you might have a fair idea what they are exactly doing all about. Right? So how the aggressive players are behaving. Let's say. Some of them could be trap buyer or a trap seller. So most of such volumes could be coming from institutions because it is happening at one shot. So it's coming on the sell side, right? So you can see 632 volumes, 576 volumes. So really, if you track down again, bigger players are selling over here again at 689, 680, right? So you might track some, if you're observing over a period of time these kinds of higher volume activity, you'll be able to say that what institutions are trying to do for the series, right? So where they are getting positioned. Yeah.
This 500 lot is fixed by you, or we can change it also.
You can change it. You can change it. For just to give an example, I just made it.
Yeah. But how much we can take? Yeah.
So it is relative again. Bank Nifty to say that 1,000 lots happening at one single place, it's very heavy, right? So it doesn't happen at all the places. Like it's 500 also doesn't happen at each and every blocks. So roughly anything about 250 or 500, we can consider that as a bigger volume. Let's say if I want to put 250, you're going to get more and more such levels.
Yeah.
So here I'll say like 250. So if you already put the lot size, this is again in terms of lot size here, because I already set the lot size at the top. Otherwise, if the top value over here is 1, if it is 1, then you have to put in terms of number of shares, right? So,
okay.
So I made it as a lot size. So the 250 also come in the form of a lot size here, right? So it's kind of filter it filters and display where bigger orders are getting floated. And those numbers are determined by you, according to your understanding, which is the bigger size. So now we'll be seeing a couple of blocks of reds and couple of blocks of yellow, where you'll be able to see where the bigger orders are getting tracked by the players. So again, kind of a visualization. And then now we can look really close to check whether are you able to see any patterns or not. Definitely these are institutional volumes. They're not small volumes. They are punching in 250 lot in one block. That means within 5 minutes, again, a 500 block getting transacted at that particular level. It's mostly institutions, right? It cannot be done by retail community. So now really you'll be able to track what the players are really doing. So you have to go and study at each and every price level, and then you can write it down. And that is how your study and that is how your understanding about how retail traders behave. You will have a clear-cut understanding over there. Like if you really want to study the institutional behavior, then probably this tool will help you in filtering out those bigger trades, and probably you might get some understanding. So you can see you see this particular volume, this particular high candle. So 250, 250, 250. This block is having somebody who has been positioned really big over here, right? So when institutions are getting positioned, so somebody is punching in bigger orders over here, right? So mostly institutions might be positioning themselves. So maybe this level could be acting like a kind of a potential support or something like that. That's what one can look into this. So what you can do here is that you can draw really a zone, or you can really put a zone like, so these are the institutional entry zones. So if there are if they are really interested parties, these people are really interested parties, they might come and support at those levels, right? So in the medium term or in the short term, you should think whether they are coming and supporting there or not. So far the price is still holding in those zones, so more or less. So are they willing to give up or not? So all these orders, you see that it's almost punched. So this entire block started from here. I think it started from here. Yeah, it started almost from here, and now almost price is in this band. So this band is quite crucial to watch out, because
sir, voice is low, please.
So what I'm trying to say here is that really see this particular block. This particular block, lot many players entered. So these are the zones. Lot many institutional players are pushing the price up to a new level. Kind of an initiative drive is happening there, right? When such kind of initiative drive is there, bigger players are positioning themselves over here, right? So we really don't know whether they are right or not. But if you want to tell really right or not, every time the price is hitting the day low, so this particular band, when they're coming at the day low, you'll be seeing a lot of absorption of the supply. So when I say absorption of the supply, what I'm saying here is that every time the selling pressure is witnessed at this band, will be some responsive buyers will be showed up. Yeah. So far the responsive buyer showed up. So price dropping and responsive buyer showed up. Price dropping, responsive buyer showed up. And similarly, now price ends up at the extreme. Now again, if the responsive buyers are showing up, that means the interested parties, right? So they are really, that means the institutions might be coming and pushing again back above there. So otherwise, if you're seeing lately unwinding here, a lot of bigger unwinding will be happening. If you'll be continuously seeing delta getting negative, that means the people who entered over there, they might be unwinding their positions over there. So that's how you'll be able to track the big buyers, whether they are entering or exiting, by looking into the delta, by looking into where they are getting positioned themselves, and you'll be able to track the institutional behavior.
Sir, can you please repeat once again?
Okay, now you're able to see the patterns, right? Maybe I'll take you to the whiteboard and then I'll explain what is how the bigger players play. Okay. So let me go back to the whiteboard.
Price alert is a part of ultimate version.
Which one? No, it is there in it's there in the default version also, I think.
But in my order flow chart, the yellow bars are not coming.
probably I think this is you need to check with Bell TPO people.
Okay.
I'm not very sure, but I think there is a price alert section is there.
Yeah, the price alert is there, but the price bar is not available. The price alert frame is not there.
Then can you please check with their team? Probably then they might enable only sound alert or something like that.
Okay.
So I think it should be there. If not, please check with their team. Right. So how one can really look into that? Let's say one of the bar here that they ran into bigger momentum. So it's a bigger momentum bar.
Sir, your voice is low, sir.
Yeah. So one of the bar they are getting into bigger momentum bar. But if you look into the bar deeply, there might be a lot of players position themselves. Like if you see those blocks, the delta will be thicker and green.
The voice, please, low, very low.
Mr. Rajendran?
Yes.
The voice is totally nil, almost.
Good morning.
Yeah, morning, Kumar.
Actually, I'm very sorry to say you have to improve the style of presentation. The voice is not clear. The subject, I don't know what we are learning for the past 1.5 days. At times it is at peak level, at times it is silent. We are not able to get anything out of the session. I am very sorry to state.
Then we do one thing, Kumar. I'll stop the session here and we redo the session next week. How about that?
That is your plan, because the voice is not clear.
Sure. Then
it is coming and same is going away.
Let's not waste everyone's time. Okay, so let's redo the session next week again.
Hello?
Yeah.
What about Monday, Tuesday practical sessions then?
Yeah, that will be there.
That will be there.
Next week I won't be available. So for me it will be very much
Recording
difficult.
will be available.
Okay.
Yeah.
No, so if I have any query like what I had today, so if any query comes, then where should I go? Actually, the sound problem is only coming when you are writing something. Okay. Otherwise, when you are deliberating your this thing, then it is not coming. Whenever you are writing or drawing something, like
No, the way I'm speaking, I'm just speaking with the same pitch. I'm not reducing my pitch.
It may not be because of the pitch or your pitch. It may be because of some technical glitch, like some wire. Like whenever you just bend down, something happens in that. It is just a technical glitch.
Okay.
So for carrying it for next week, then it will be little bit difficult. Because still recording, if somebody was to go through once again. But in live session, what happens? Then I can ask you directly.
Raj, could you unmute everybody and then continue? I think then it seems to be okay.
Okay.
You could mute everybody and then you continue with your voice for 10 minutes. Let's observe. I didn't see much of a variation in your voice actually.
Okay.
Yeah, it's very clear.
Just give me a minute. Let me think about it.
Please mute everybody, sir. Don't give a.
Let the question come from chat window only.
Okay.
Mr. Rajendra, just one suggestion. You could continue with the session as per your planned session.
Yeah.
At the end of the session, just unmute and then let the questions come in. Right now, in between, if you ask a question, I think that's breaking the flow.
We'll do one thing. We'll redo the session one more week. We'll today continue the session. So will that be fair to everyone?
Yeah, that is better, Mr. Rajendran. Please continue today. And if you want, you can again do in the next week also.
Okay, Pradeep is suggesting not to use a whiteboard because every time that I'm trying to use a whiteboard.
Yeah, I think even we
whenever
you are using whiteboard.
I'm right now using whiteboard. So are you finding any difference?
No, I don't.
No, it's okay now. Sometimes okay.
Once we reach a consensus, just unmute everybody.
Sir, the problem is echo, sir. The problem is echo, sir. So please mute everybody, sir.
Yeah. Mute everybody.
Mute everybody, sir. Automatically.
Hello.
Yeah.
Hello. I think in fact, if you want to redo this session, I think my suggestion is you first record whatever you want to teach us, and then give it to us. Then have an interactive session. Now what is happening is we are not reaching anywhere. You are telling something, after that everybody comes in, asks a lot of questions, then somebody is asking something else.
See, that is what I said. Like I always say, like
there is no flow at all. What we are suggesting is so that if you give us recording advance, so that we can watch it again and again, so that whatever doubts etc. we are having, we can make a list.
Sure. Then in that case, I'll do one thing. I'll also make an recorded flow, and that will help you to go step by step. Right?
Yes,
So that's why I said, like, don't disturb the flow. Otherwise, people keep asking questions. Always they have a lot of questions. Right? Always your mind is going to look into the moment.
And one more problem with the interactive session is that some people, they are already aware. Like me, I know a little bit about that, so I don't have much doubt. But somebody who is starting from the scratch, he's having a lot of doubts. So we can't blame him for asking that thing. So what I'm suggesting is you give your recordings in advance. Ask us to go through that repeatedly. Then whatever final doubts we have, we can ask you that. I think that is better.
Okay.
Yeah, that's a bad.
But really, tell me, you people not able to understand what is initiative drive, what is responsibility.
Of course, we understood everything, but the problem is
I have a couple of questions. I just know that because people are saying that they're not able to get anything out of it. First, let me clear one by one. Is anybody able to understand what is initiative drive, what is responsive drive?
Yes.
Yes, sir.
No. I'm asking only the people who don't who are not able to understand. Let them speak back.
Yes, sir. We don't.
One Kumar, how about you? My question is only to the one.
Please repeat it, Mr. Rajendra.
Are you able to understand what is an initiative drive, what is a responsive drive?
No, because of the audio problem, we could not make the words to come together. Actually, very confusing.
Okay. My question is, are you able to understand what is initiative drive or responsive drive?
No, I can't hear it properly, so I definitely not.
Okay.
Sir, our suggestion is please continue this today. If you repeat next time again.
Sir, I've got one small suggestion. People who have not understood in this webinar, they can be accommodated in next webinar, and the flow can be continued as of now. And in the meanwhile, today's audio can be recorded and be given to them. So whatever questions they have, they can clarify in the next webinar as well.
So maybe I'll do one thing. I'll try to switch my another PC. I have one more PC next to me.
I think next week, you can set up an interactive session, right?
Okay.
So whatever the doubts people have, right, they can come and they can. In the meantime, they will go through video, whatever you have shared with us, right?
Yes,
so
I think that's a good idea.
At least my suggestion is at least one topic you finish first. Till then you mute everybody. Even so till one session, till one topic is finished, nobody should talk. If you have some doubt, ask absolutely. Now what is happening is you are teaching something, in between somebody comes in, they are asking first doubt they are asking, then they are moving to another topic.
Fine,
Yesterday's session was much more productive, but unfortunately today we are meandering totally away from the subject. Means not subject, but first we start from one subject, then we are meandering away from that.
So I'll tell you one problem is that people always straight away want to look into the where to buy, where to sell. So unless they are not, we're not going to complete the basic, right? Unless they're not going to learn the letters, we are not going to write the poem.
Right.
So my suggestion is, if you are going to continue today, then you first.
I'm going to continue today.
First finish one topic. Till then, you please mute everybody so that nobody can intervene in between and stop the flow.
Sure.
Okay, please do that.
Okay.
I'll do one thing. I'm going to mute everyone so that you cannot unmute yourself. While I'm asking questions, I'm going to give a control to everyone so that they can unmute themselves and they can ask questions. Is it okay?
That should be the best way.
Sir.
Yeah.
Yes.
Excellent.
I'm going to unmute.
Please keep chat open. If somebody wants, they can put chat also. Okay?
Yes.
Okay, so chat, you can always comment, and then I'll be watching those chat as well.
Yes, please.
I'm going to mute everyone now. Okay.
That's a better way, sir. Unmute, then at least see now and then chats. Okay, that's good.
Sure. Okay, so everyone got unmuted. So if there are really any still audio issues somebody is facing, then we have to take it to the next session. Only I'm okay to deliver the same presentation with a continued flow in the next session. But yeah, today we are going to continue with the sessions now, and whenever I'm going to take questions, I'm going to unmute. I'm going to give a control to everyone so that they can unmute themselves and they can ask questions. Only ask relevant questions, right? So don't try to deviate from the topic. Fine. I guess that sounds fine. Yeah. So I'll come back to the PPT again. We'll go and discuss the basic concepts of order flow. And thanks, people, really for giving the feedback. This is one of the session which I received maximum feedback, to be frank. So let's get back. So here we are really talking about the stronger options and weaker options. Next we are looking into the volatility. Like so, volatility is nothing but it informs that there is a change in market participation. Like all of a sudden, you might find on even days, like RBI policy announcement date or GDP announcement dates, or an earnings season times, you'll be finding a lot of volatility, right? So what volatility really means is all of a sudden market used to go up sharply and then again comes down sharply. You'll be seeing the range of the candles tend to be really high, right? So probably if you want to spot an example, let me get you an example from the charts over here. So from the charts you can see the volatility of the candles are really bigger in a downtrending markets. Really you can see in a nice calm markets, you'll be seeing low volatile candles. You can see the range of the candles are really small. But as the fall is really starting down, you can see the candle ranges are getting bigger over here. The candle ranges are getting bigger over here. There are many candle ranges you can see bigger candles. Those candles I'll call that as a high volatile candle. Right, so again, you can see the volatile candles over here. Candles are volatile. So especially when there are events, right? So you can expect such kind of high volatile candles. Not before the event. Before the event, you'll be going to see a very calm environment. And once the event is about to start, let's say the RBI event is about to start in 15 minutes, or the RBI event is about to start in another half an hour or so. So that is the time really volatility start kicks in. You'll be seeing high volatility on the upper side or on the lower side. High volatility doesn't mean like uptrending markets, right? High volatility means the range of the candle is getting much bigger and bigger. And so the trading range will be higher in high volatile situations, lower trading range in low volatile situations. Usually, if you look, most of the bear markets are dominated with high volatile situation, and most of the bull markets on a daily scale are dominated with the low volatile zones. Low volatile zones which there are no much of surprise in the markets, right? So market moves slowly and steadily up. So most of the bear markets are having the characteristic of high volatility zones. High volatility doesn't mean like high volume. So we're not talking about volumes over here. Yes, there are cases high volatility is combined with high volume. But there are cases, even there will be a big drop, like the example which I shown in Dr. Reddy, where the last 15% crash happens only with a very low volume. That is mostly because of the liquidity crisis. So here is an example of the high volatile bars. So sometimes the high volatility is also combined with high volumes also. So in this case, you can see a high volatile bar. And that is also a relative term. So in case of Nifty, I would say that on a 5-minute charts, if the candle is having more than 30 points or 40 points in one 5-minute candle, then we can say that that is a high volatile bar. Right? So here in this case, if you look into that, the volume also higher. It's kind of a trapped buyer also at the top, and the delta is also huge, and the volume is also relatively huge. So 3,247 contracts got traded in that particular candle. So it is one of the way where you can say that it's been an high volatile candle, very high volume, very high delta. That is how most of the times you are going to get an exhaustive pattern. So when I'm talking about exhaustive pattern, the really will be looking into the volatility candle as well, right? So okay, so we already talked about this initiative, responsive initiative auctions, and responsive to responsive auction, and initiative to initiative auction. And initiative, responsive initiative auction will typically look like this. So market moves in a low liquidity zone, and then let's say, for example, Goldman Sachs or JP Morgan, they want to buy 1 lakh of Reliance shares. So what they do is that first they will push through the price towards the liquidity zones. Maybe the liquidity might be available in this zone. So once they find the liquidity, they become responsive buyers. So every time they'll be start eating all those liquidity zones where a lot of limit order sellers are there. So they go and hit those levels, and they started accumulating those price levels. So a lot of accumulation happens in this zone. So when this accumulation is happening, you'll be finding a lot of responsive activity in your order flow charts, and followed by that, again they will do one more initiative auction to find the next level of liquidity. So maybe the next level of liquidity might be over here. So in this case, it will be initiative. It will be an initiative level, and then again followed by that, we'll be going to see an responsive activity, and followed by that, you're going to get an one more initiative activity over here. That's what we call it as an initiative, a responsive initiative. Whereas when it comes to responsive, right? So it will be like it's gonna get into an thick order flow level where a bigger sideways action happens, where market will be moving mostly in an responsive to responsive, again responsive to responsive, responsive to responsive. You'll be seeing a lot of sideways activity, a lot of accumulation or distribution happens over here. Either accumulation happens over here or a distribution happens over here. Market will be mostly running in the ranges, right? So that kind of activity we call it as a responsive to responsive activity. And initiative are mostly V-shaped reversals. So like there'll be an imbalance. Initiative is nothing but an imbalance level. So we really want to see an initiative move from the charts on a 5-minute time frame, or it will be a 15-minute time frame. We're going to see a lot of initiative drive from the markets, and followed by that, you're going to see an V-shaped reversal. That is what initiative to initiative auction is all about, right? So most of the initiative auctions are dominated with a higher volume, directional delta, and yes, at times with high volatility also. Right? Most of the responsive auctions are mostly characterized with typically high volume, typically reversal delta absorption, and typically low volatility. Most of the responsive auctions are characterized with low volatility. Means the range of the bars are pretty small, whereas the initiative drives, you're going to see some high volatility and high volumes. So now getting moved to the slide. So these are the 3 activities you're going to always see in the markets, right? Always market move from initiative to responsive, and the change from responsive to initiative is what most of the strategies are built on. And coming to the high volume area, right? So higher volume area is nothing but it's a higher participation activity. As I said, many short-term players see that as a support or a resistance, which you're gonna find it. Many new players will find it in many new players find those information as kind of a support or resistance, but really we don't use those information as a support or resistance unless we are seeing a bigger balance. We don't look into particular days high volume area, right? So but high volume area is one level where most of the people consider that as a support or a resistance whenever your price is hitting a high volume level, let's say high volume area level. So this is a high volume for that yesterday, and you might take a recording of it. And many times people try to hit that high volume node. We call that an HVN. We call that as an HVN. It's also called as high volume node. HVN is also called as high volume node. If I try to draw a volume at each and every price level, I'll be seeing at at each and every price level. Assume that this is the days of activity. And there are places where bigger volume would have been transacted at a particular price. This volume we call that as a high volume node, HVN. Right, so that means those levels has higher participation activity. Maybe buyers and sellers interaction is more, and as we seen, one of the gentlemen was considering that if the price goes up, can I go and short there? That's the thought many people like to do. Again, that is a typical trader's thought. Yeah, it acts like a resistance, immediate resistance. But if somebody you are really seeing that. People who are coming and selling over there, they are mostly traders. They're not serious money players. They are only traders. They are looking for quick profit. So when they are making quick profit, they'll exit their positions over there. So really, you cannot continue as a positional trading over there. But yes, for a very short-term trading, you can use that as a reference. But eventually, those reference, wherever you're seeing such kind of mechanical play, which has happened by the players, price again tend to go and revisit back. Right, so that is how we can use the HVN information really, right? And high volume area is also zones where bigger liquidity has been supplied for the day, right? So we call that as an high liquidity zones where more players are coming and transacting, more buyers and sellers are willing to transact for the day. It's kind of an equilibrium point for the day. And next comes the low volume area. Low volume areas are typically imbalance areas. So from the order flow, you'll be able to see that there are places where you can see high volume transactions are happening. You can see over here, 1,000 lots got traded, 1,000 lots got traded. And so typically, those zones also marked with high volume zones. Right? So there are multiple HVNs you will be able to see. This is one HVN, second HVN, third HVN. So there are multiple HVNs you're able to see from the left-hand side on your volume profile charts. So let me go back to the charts here. Next, we're going to talk about the low volume area. Low volume area is nothing but lower participation activity, and which is nothing but the lack of a liquidity zones. Probably on the limit order book, not many commitment is there from the limit order of the people who are placing their limit orders. Very less and less limit orders are getting transacted over there, and so if somebody is traveling through the aggressive, somebody is traveling through the low liquid zones. Assume that this is a low liquid zones over here. And when the price is traveling in a low liquid zone, typically, let's say the limit orders are very less. So it used to travel faster. It will not be slow traveling like this. You may not be finding a slow travel like this. Price, whenever it's traveling in a low liquid zones, the transaction happens faster and the push will be really bigger. That is why the velocity of the market will be moving really faster when the price is traveling in a low volume area, especially when there are lack of liquidity, right? So whereas if thick sellers are there, if thick buyers are there, price will be moving very slow and steady in the zones because a lot of supply will be happening in those zones. And low volumes are a result of stops. Sometimes people would have kept the stops, and sometimes it is lack of liquidity, or sometimes algos are coming and playing at the day's high or at the day's low. Algos might taking control over there. So really the aggression from the participants. So there are many cases why a low volume happens. When there is a stop hunting is happening, by that time you'll be finding a lot of zeros, a lot of when a typical stop hunting is happening. Maybe I'll show you how it looks like. Let's take a block over here. Assume that this is an order flow block, and your transaction will be mostly happening like this. Let's say you're going to find a lot of zeros inside the blocks. You're going to find a lot of zeros in the box, and on the right hand side, you're going to see some volumes like 10 lots got traded. So this is at the day high. When the day high is hitting with a couple of zeros. Right? That is one other way where we can identify that exhaustion highs. It's one other way where we can identify an exhaustive highs. 30. So something like this. When the price is hitting the day high, you're going to find a lot of zeros over here. and when the price is really traveling on the upper side. The price is going to travel on the upper side, so that particular block of that candle really going to look like this. And you're going to find a lot of zeros on the left-hand side. That means no transaction from the sellers. Only buyers are pushing the price up, but you're going to find a lot of low volumes, right? So that low volumes are nothing but result of a stop hunting, right? So that's nothing but a result of a stop hunting. But to show an example here, so there is one slide back, we have a similar example. And I'm going to go back to the previous slide. So if the previous slide, if you look into it, you're going to see a lot of zeros, which is going to happen at the day high. A lot of zeros over here, right? So those are really the signs of stop hunting, where the volumes are typically going to be pretty low over here. So it was a real push from the candle, but when that push is happening there, you're going to see a lot of zeros. It is also a day high. It's also a day high, and that is how a day looks like a kind of an exhaustive high. We want to talk about exhaustive high shortly, but when such kind of exhaustive highs are happening, probably it is a sign that probably we are very close to the top. So you have to be look for a reversals. As I said, the reversal can come in the form of a delta divergence, or the reversal can come in the form of a momentum auction reversals. So there are many cases but in this case, if you look in that particular bar volume, you're going to see a bigger delta, bigger volume. The volume will be relatively bigger. But if you look at the edge of the candles, right, so you're going to see a lot of zeros at the day high, a lot of zeros at the day high on the selling side, right? And typically the volume transactions are pretty less on the buying side. We're going to talk more about it, but time being, we are just talking about high volume area and low volume area. So when you're finding a stops or when you're finding an absorption, it will be usually resulted in a typical low volume area over here. So now coming back again, liquidity. So we already talked about liquidity many times. Again, we have a one round of basics over here. So liquidity determines the velocity of the price. So whenever price is traveling in a high liquid zones, the velocity of the price is very slow. That means the price will be moving very slow in those zones to eaten up all the liquidity. One of the typical example which I had given yesterday is like when we talked about this. Let's say the entire block of order book. If you look into the order book contains limit order, right? Inside the limit order, if you're going to have only less amount of buyers here, so let amount of so one lot. So this is inside the order book. I'm not talking about this block. Is not a order flow block. This block is order book block where limit orders are sitting here. Right? We talked about this yesterday. So assume that low amount of volume is there at each and every price level. So if I really want to move the markets by 1, 2, 3, 4, 5, 7 points, so at each and every point level, I'm having only one lot sitting over there as a seller in the limit order book. So if I punch 7 lots, automatically price will be jumping in one shot from it will be moving straight away towards on the upper side. A 7 lot is just a 7 lot is required to push the price from here to the from the point A to the point B. Just only 7 lot is required, right? Because the liquidity is very low over here. That means the velocity of the price will be very much higher. The velocity of the price will be very much higher, especially when the price travels in a low liquid zones. But if the liquidity is really high, right, the interaction between the buyers and sellers are really high, and in that times it takes a slow period to move from point A to point B. So assume that here instead of 1, we are going to have some 100 over here, and instead of 1 here, let's say some 234 quantities are there, and again another 500 quantities over here, and again another 600 quantities over here. If I'm going to punch 7 lots over here, I'm not even cross, not even the level 1, right? So I'll be mostly able to push the market only from here. If I'm going to punch 7 lots, I'll be able to still, I can push only over here. If I want to really push hard, I have to purchase at least 2,000 lots. If I purchase 2,000 lots here, then means then only I'll be able to push the price really up. So when the price is traveling in a high liquidity zones, so these are high liquidity zones, we talked about it. These are high liquidity zones and these are low liquidity zones. So low liquidity zones. When illiquid markets will trend until they find good liquidity zones. Illiquid market means very low volumes on the order book. That will be easily trend and that will be easily trend faster. And zero liquidity zones, at times you're going to find inside the order flow, you're going to find a lot of the zeros with higher momentum act. Those are the one which going to act like a key support or resistance. We're going to talk about that. So some of the zero levels are mostly key support zones or key resistance levels. And there are zero liquidity zones with lower momentum. They generally gets filled, right? Maybe I'll give you a couple of examples once we are done with that. So here are the examples, some of the zeros which are coming at the tops. You can see some of the zeros is coming at the tops. So those are the auction because of kind of a stop hunting, those kinds of zeros get filled. And there are intermediate places where you're going to see a zero, right? So if those zeros are coming up with the real momentum, so those real momentum places could act like a kind of a resistance zone. Those zones could act like a real resistance zones. So in that place, you have to combine liquidity with a imbalance chart. So that is why the bid-ask imbalance charts comes will be more meaningful. So maybe to get an example, let me go back to the Bank Nifty charts or Nifty charts, and then I'll show you. Let me go back to Nifty. So inside the Nifty order flow charts, last Friday is less liquid zones. Anyways, for time being, I'm gonna remove the unfinished auction levels because it's kind of quite distracting. Unfinished business levels, I'm gonna remove for time being. So I'll not have any zones. So you see, first of all, let's talk about the zero zones, right? So when these kinds of zero zones are there, so these kinds of zero zones are here and here. So these are a result of no volume got traded over here. And look into the price. The price was traveling with a lower imbalance. So the imbalance is over here and some imbalance is over here. When the imbalance are not there or the imbalance are at very distant places, price always have the tendency to re-backfill those levels, right? That is what I said. So the zeros liquidity zones with lower momentum. So one of the example what we seen right now, it has lower momentum in that candle, and those zero liquidity zones generally gets a fill, right? So that we will not consider as a key support or a key resistance. However, let's say let's take an example over here. One of the big candle over here. One of the big candle, and inside that candle you are seeing some lot of momentum which is coming from the buyers. So there are a lot of buying momentum, and followed by that you are seeing an zero in place. So there is a zero in place on the buying side, and again it is stuffed by one more momentum block, right? Those zero zones could act like a potential key support level. So those zero zones will really act like a key support zone. So means whenever the price comes near to that level and you're seeing an absorption, right? So when you're seeing an absorption is happening over here, then one can think of initiating a long at those locations for a quick scalping perspective. Those zones act like a very short-term support zones. So again, delta positioning. Delta positioning, it's one way where you can find smart money enters into it, and while looking into the delta positioning, it be really looking like from the order flow perspective, the participants will be trying to add more to their positions there. I can draw order flow block here. Consider this order flow block, and inside the block you'll be finding like the delta values will be quite significantly huge, probably 300 quantity here on the buying side, probably some 18 quantities on the selling side, 18 quantities on the selling side, and again some 254 quantities on the buying side, and probably some 12 quantities on the selling side, 12 or something. So the volumes on the left hand side will be very less, whereas on the right hand side will be more and more bigger and bigger. So if you look really into this order flow blocks, you can find the delta players are getting positioning them. So the buyers are getting positioned in this block when the price is really traveling fast. And again, you can consider this zone, these kind of zones, if you are able to find out, you'll be able to use this as a band. And when the price is really when the price is really traveling from there, when the price is moving really fast from there, and again coming back to the level, you're going to see a lot of absorption activity. That means, so these are the smart players who have entered already. They come for an support again at similar locations. But when you see this, many people, what they do, once they see the block, they tend to take a trade and then they will expect a continuation. But ideally, most of your best locations are like when the price is returning back to the level, when the price is coming back to this zone, and you're going to see a lot of absorption happening in this band, and responsive buying is happening from here. That is why one have to initiate a trade over here, because most of the events, like an RBI event, what generally happens is that price moves, and then you can find a delta positioning activity somewhere here. Players are going to position themselves and they move, and then RBI announcement happens, and then they come and do a lot of activity, and you'll be finding that there won't be any absorption. So instead of absorption, you'll be seeing consolidation over here, right? So, and they do an unwinding. So when the price is retracing to that level, when the price is coming back to the zone towards where the delta positioning happened, if you are really not finding absorption, there is every possible chance that can be broken, right? So that is why you find that delta unwinding happens. When this unwinding is happening, you'll be finding a lot of negative delta on the screen, right? So how the delta is getting positioned, where the delta is getting positioned, that is one another thing an order flow trader has to look into the charts. Wherever you're finding a delta positioning, keep marking your charts saying that this is where the delta is getting positioned. Really, you can use the delta. There is a different way of order flow representation which calls for an delta positioning. So this is a delta candle. Here in this case, you can see a block of this block where you can see the delta players are getting positioned themselves. So in that case, what I'll be using is I'll be drawing a reference line over here, and every time I'm going to see every time I'm going to see the price comes and retrace to that level, then I'm going to use that as a reference level to look for an entry points over here. So that what I have to watch here is that I have to really watch for an absorption. an absorption is what? An absorption is like price falls down, you're going to find some bigger quantity there, which will be supported by those players who are positioned themselves over here, who are positioning themselves over here. They'll be able to see some sort of a great absorption coming at the same typical location. Again, you're going to get some bounce back. So maybe I'll try to check if there are any absorption one can watch out. I think in Bank Nifty, I've seen, I believe. So most of such a delta positioning, one will be able to get how the institutions are getting pushed themselves. This is a delta chart. So really you can see there are places where the players are getting pushed themselves. There might be zones where you'll be seeing bigger delta in blocks, right? So they'll be coming in packets mostly. That is why it's also called as a delta packet positioning. So think about this zone. So this one particular zone where I'm seeing more the delta players are coming and happening over here. So this is one block where I'm seeing an delta coming in packets. So when the price is coming next time, right? So it is not an entry zone. The very time next time your price is coming and stopping there, it has to stop there and it has to do an absorption. Then only one can think about initiating a trade over there. Otherwise, not every place you're gonna take a trade over there. So because you see these packets, don't get mesmerized with that. So next time when the price is revisiting back, you have to really, the price has to really stops there and you have to find the absorption pattern. Then you can initiate a trade over there. Right, so many people, they do the reverse. As I said, they see the pattern and they say that, hey, this is my support. You really don't know what the players are going to do, but if they are really started doing a lot of absorption, that is one place where we won't have to initiate a trade. So let's see whether there are other places where the delta players are getting positioned. Really, the markets are moving in a kind of a sideways. Not much of an delta positioning here. So this is a delta order flow charts where the buyers minus sellers at each and every price level has been shown over here, which is also called as a delta at price. You can see here, look into this particular candle. The delta players are getting positioned over here really in a bigger way. So this particular block. And you're finding a lot of zeros. When we are finding a lot of zeros, what does that really mean? You can type and say it to me. What does it really means? When you're finding zeros, a lot of zeros at the day high, what does that really indicates? Yeah, it's nothing but a stop hunting. Yeah, it's a stop hunting. Great. So it's then in that case, what we call that high as an exhaustive high. It's called as an exhaustive high. And those are the locations where you have to look for the trading opportunity. The trading opportunity might be immediate, or there are a couple of ways you're going to find a trading opportunity over here. So now you can see that the delta players are getting really positioned in this block. You see a thick layer of delta coming over here, right? So they use this zone as a kind of a pocket positioning zone to enter all their shots. So most of the shots are entered in this band, and every time the price is coming and revisiting those levels, you're going to find a lot of absorption. You're going to find a lot of absorption over there, and every time you're going to find an absorption, maybe the absorption can be monitored from the bid and ask imbalance charts. If I go back to the bid and ask imbalance chart for the same levels, we're going to see a lot of absorption from the participants over here. So there, every time there was a big volume which is happening over here, price used tend to go down. Again, price come to that level, again sell off happens. Price comes to that level, sell off happens. And that means the bigger players are really defending those zones over there. Right. So we're going to see again a couple of absorption activity has been observed over here. So that is how the delta positioning happens. And really, you can watch those delta positioning from applying the delta order flow charts. It's also called as a delta at price level. Delta at each and every price level, it measures, and then wherever the bigger positioning is happening, participants defend those positions, and they even tend to add to them. That's how the institutions does the accumulation. They do accumulate in the form of an absorption. What one have to monitor here is that absorption at the delta positioning zones. Market will always test the delta pocket zones because it is a zone where liquidity is being supplied. So again, the market will always tend to go and test it. While testing, you have to look for an absorption. If it is an absorption, then higher signs of continuation in the direction of delta positioning. Otherwise, what you're going to see is a delta unwinding. Right. So a delta unwinding is a similar concept where you're going to see a packet of delta positioning. Players are going to find themselves. I assume that this is one of the big candle, where most of the players got positioning themselves in one of the block. Right? So they would have you might be seeing a lot of packet delta positioning over here, maybe delta positioning over here. So you're going to see a range of values. So you're going to see some bands. So this is the delta packet zones. And again, there is one more delta packet zones. Assume that there are two delta packet zones are there. And when the price is moving up and again coming back to the level, right? So if there are interested parties, they will do absorption. If they're not absorbing, instead you are finding, instead of the no absorption is happening, but the volume transaction is very low, probably your order flow is showing 20 lots are getting traded or 10 lots are getting traded over there. Really some sort of consolidation. It is not an absorption, it is some form of consolidation, and the price is jumping back, which is a weaker sign, which all have the odds of delta unwinding. These kinds of delta unwinding typically happens during events. Right? So typically happen during events where they might get positioned themselves, and around during announcement, they tend to unwind all their positions back. So they will do a lot of activity here, and then they will unwind all their activity. So these are the zones where you're going to see a lot of consolidation before and unwinding. The volume gets lower and lower, and these are the zones where previously high liquidity was there. Right now, when the price is coming down to the same level, you in the order flow you'll be finding that low and low volumes are getting transacted over there. That means really there is no supply coming there from the previous participants. So more activity is going to happen, and it will be result in less amount of volume, and that means really there is no absorption there, so which will eventually result in delta unwinding. So this delta unwinding you can clearly see from the cumulative delta part. So the cumulative delta part, okay, you'll be able to see that the delta will be characterized by negative delta, negative delta, negative delta, negative delta. All these places you'll want to see a lot of negative delta. So where a lot of unwinding is happening from the participant at each and every price levels, right? So typically when the volume is when the price is going up, when they are going to hit an delta unwinding zone, and when the price is going up, when they are coming back to the level, when they are coming back to the delta level, so we have to measure at this level what is happening. If there are no really absorption, and price could do some activity, sideways consolidation. And then so there are places where subtle behavior comes, where you're going to see some unwinding there before they're getting the delta packet zones. So they are going to unwind if there are no serious buying, or if there is no serious buying is about to happen, there is no absorption is going to happen. Unwinding is the final end result of this game. So where the short-term participants are not concerned about the price, they just simply liquidate. So who are the participants who position themselves, if they are not concerned over here, they just simply liquidate. So they entered over here where your cumulative delta keeps rising. Your cumulative delta will keep going up. It keeps going up cumulative delta keeps going up. The value will be, you'll be throughout the candles, you'll be seeing each and every candle, cumulative delta keeps going up. But when the price is returning back to these zones, right, and there are not much of activity over here, and the cumulative delta keeps negative and negative and negative, and finally they end up in a complete reversal. Cumulative delta, even a positive cumulative delta, all of a sudden becomes negative. So one of the examples I'm going to show over here how that unwinding looks like. So in this case, you can see that cumulative delta values are getting more and more negative. Probably you can watch the cumulative delta values over here, this particular block. So what was happening over here is that all of a sudden some participants loaded their positions. When the price is coming down, you can see quick delta coming with an more and more negative delta over here. So negative delta over here, negative delta over here, negative delta over here. So these are the signs that unwinding of the delta usually happens. If you look into any realistic examples, maybe we can go back to the charts and check. In Nifty futures, sometime back, around February 12 or 13, such kind of delta unwinding happens. So look into this particular days of activity. Over here. Not much. The volume transactions are pretty less. Look into this zones. Again, a 5-minute time frame. If I go back to the delta. Not much of delta zones over here. Let me see. There should be initiative drive while they are finding for me and delta unwinding. Maybe let's go and check back the RB announcement event. So while seeing the RB announcement event, we'll get to know there is a delta unwinding happened over there. And even on the budget day, right? So February 1, let me go back to February 1. On February 1, one will be able to spot a delta unwinding. Okay, so on February 1, what happened? So this is budget days activity. So where many players positioned themselves and then went up, and finally the unwinding happens. So let's closely look into what happened over there. How the players, you see a lot of players are positioning themselves in this band. So there was an initiative drive. There was an initiative drive over here. You see the way the participants are positioning themselves So you can see the blocks of positioning, this particular block. You're able to see that? On the left hand side, the volumes are very thin, but on the top, you can see more and more delta is getting traded. So it's kind of a delta packet positioning over here. And this delta packet positioning was happening. You can see a lot of delta is getting pushed in over there. So if you take this entire block, if I keep this entire block, so when the price is about to come to this zone, price went up because of on that budget day, price really went up, and then when they're coming and testing the zone, you can see there are really no momentum is happening, and mostly consolidation was happening in this band. So there are no real players coming and supporting over here. You see that less and less imbalance is happening over there, which is a sign that it's mostly a kind of consolidation. No reversal is really happening there. So one of the places where you can anticipate and sell off, especially when this delta unwinding is happening. Prior to that, you can see the delta, the cumulative delta was negative. Sorry, the cumulative delta was positive. This block, you can see thick of positive blocks coming in. The levels was around 2,900, 2,600, 2,300 levels, 1,927. Right? The delta was positive all the way. The delta was positive all the way over here, and then which is followed by that the break start. See the break, that is where the delta unwinding is happening. More and more players. It's the same player. They are just unwinding their positions. Who were entered at that block. Really, there is no really. They entered over here. They started booking profit right from the zone, right from the top. They started booking their profits, and when it is reaching their zones, more and more unwinding happens, and all in a sudden you can see the delta got into negative. So here you can see that all in a sudden, quickly the delta got into negative over here. So all in a sudden there is a transformation from the delta value of 490 to 1413 level. So there is a quick delta unwinding is happening. So which you can able to measure from this block zone. So from this block zone, if you really look into that, instead of absorption, more and more consolidation happened, and then the moment where the price was getting less and less liquid, you can find a lot of zeros which is happening inside the range. So that's why you have to prepare for a liquidation over there, right? So less and less transaction happens, and it goes for a liquidation. So to explain the scenario again, I'm going to repeat this again, what happened over there, how the players tend to do in a delta unwinding. There will be an initiative drive move, first of all. Always that initiative drive will be with delta positioning. So where you want to find a block of delta value, that zone has to be monitored. That zone has to be monitored for any absorption or any one more initiative drive. Price moves up, and that could be an event. And always, since it is a high liquidity event, the price mostly come back to those levels. When price is coming back to those levels, and instead of absorption, you're going to see a lot of consolidation, and the cumulative delta keeps going down. So these are the places where the delta will be getting negative, and there won't be any real absorption happens over there. And all of a sudden, there will be subtle change, which it says that a possible initiative drive is about to happen. The volumes will be start getting lower. That means when the volumes are getting lower now, that means, what does that really means? Can anybody say? Now the volumes here are getting lower and lower. What does that really means? So we find the liquidity zone. We find this liquidity zone, and a decent volume transaction happens, but there is no real absorption. But now the volumes are getting lower and lower and lower. That means that particular zone liquidity is now getting dried up. Yeah. So ready to break down, because that zone, almost all the limit orders would have been eaten up, and now the zone is ready to break, and that is where the liquidation happens. That is why you have to prepare yourself for initiating a downtrend. Right? So these kinds of things only come by observation, only come by practice. So delta one unwinding, mostly we're going to look only once the player got position. If they are not really interested, they will just unwind their positions there all of a sudden. Before to that, there'll be a lot of subtle information one can read from order flow. Yeah. So again, trap buyers and trap sellers. We already talked about this. So trap buyers and trap sellers really, which is a high volume transaction, which is happening at the extreme day high or at the extreme day low, which is also termed as a bad high or a bad low, right? So typically when such kind of trap buyer or trap seller is happening at the day low, let's say price is hitting the day low, price hits the day low. And you're going to see some trapped activity at the day's low. At the day's low, you're going to see some trapped activity. Price was really, prior to that, price was really moving down. And you're going to see some thick buying activity happening at the day's low. That zone, it's going to act like like a kind of a temporary support zone, and price usually returns back. So typically, when it comes to Nifty or Bank Nifty, you're going to see points like 25 points in Nifty, or at times in Bank Nifty, it could be 100 points. Very rarely, it could be a day's low also, where most of the maximum reversal happens from that kind of trap buyers or trap sellers at the day's low. So, but when looking into the data feed point, right, sometimes global data feed will show like a buying activity, or a C signal will show like a selling activity. It really doesn't matter. All we need is a big volume transaction which is happening at the day low. We call that as a trap buyer or a trap seller, right? And but those are, one have to remember that they are really bad highs or bad lows. Price always tend to mean revert back towards those trapped buyer or a trap seller. So we call them as a trap buyer or a trap seller. Trap buyer or a trap seller. Price positionally, this mean reversion will happen positionally, not necessarily intraday. At times it happens intraday, but mostly it happens positionally, right? So positionally also one can expect this level to get revisited back. Those levels are have a tendency to revisit back because it is a poor way of facilitating the trade. Typically, if you look into any days high or days low, most of the days high and days low are having very low volume. So sometimes in case of examples like Nifty or Bank Nifty, most of the day lows are characterized, good lows are characterized with 20 lots or 50 lots or 100 lots, typically less than 200 lots at the extreme day high or extreme day low. But whenever you are seeing 1000 lots at the day high, or 500 lots at the day high, or 750 lots at the day high, they are a characteristic of a trap buyer or a trap seller. Always price have a tendency to revisit back positionally, right? So one of the example what we seen is on last Friday in Nifty, we had such kind of trapped buyer at the day high, where somewhere around 900 quantities got traded at the day high. So I want to show you now. So this is Nifty order flow charts. Then the price was making a day high, right? So you looked into this information. Almost you can see an exhaustion high over here. A lot of zeros was coming in, and look at the total quantity. We are mostly focused on the total number of quantity. How many lots got traded? Almost 965 lots got traded at the day high, right? Which is not a good characteristic, which is happening pretty close to the day high. 965. Always positionally, price having the tendency to revisit back positionally, right? So yeah, and at times intraday, typically what happens is that whenever you're seeing this kind of bigger quantity which is getting traded, typically the price from an immediate perspective, price always tend to move towards the VWAP levels. The VWAP levels are nothing but the chocolate brown levels. Price having a tendency to revisit it. The moment you see that, it's an immediate shot, which is also happening at the day high, where you're seeing an exhaustive high also. The very first thing one have to go and do is that when you're seeing this, a lot of zeros over here, a trapped trap buyer or a trap seller over there with a very, very big volume, price always have a tendency to mean revert towards the VWAP levels. So next comes the so there are a lot of examples we already seen for trap buyers and trap sellers. So that I'm gonna skip right now. These are again another examples on trapped seller, where big seller got trapped at the day low and the price mean reverted back towards the VWAP levels. And again, here is one more example on trapped buyer and price tend to mean revert on the downside. So exhaustive high or exhaustive low are kind of stopped out trades. So where things get exaggerated, where price response at the extremes with wild swings, it will be mostly characterized by highest delta, high volume, and wildest price rotations. So there are a couple of ways where you can identify an exhaustive high or an exhaustive low. One of the example is something like here you'll be finding a lot of zeros over here. As I said, these lot of zeros are one characteristic of exhaustive high, where the volatility of the candle, the range of the candle is really, really big, and you're going to see a lot of zeros at the tops. That is a real sign that it could be an exhaustive high. Whereas the exhaustive low comes the exact opposite of what exhaustive high is all about. So where you're going to see a lot of zeros in this at the day's low. I'm talking about the day's low, where a lot of zeros are going to come in. So these are result of stopped out trades, and where exhaustion happens, where one can take an immediate reversal. Right? So again, these are again bad highs. Temporary reversal happens, but one can always use these positions to take a quick scalping zones. And there are times an exhaustive high, when really talking about exhaustive high, one with zero stop hunting zones. It happens with zero stop hunting zones. The second case is like less volume of imbalance zones. So what does that really mean? So what does that mean is that let's take a candle over here. Let's take a high volatile candle. Always most of the exhaustive handle have the characteristic of high volatility and high volume. Okay. So when I really draw an high volatile candle, so inside the candle you're going to see an bigger momentum, bigger imbalances will be coming over here. But at the day high, you're going to see an imbalance, but that imbalance will be having low volumes. When I say low volumes here, the transaction will be at some 10 lots over here. On the buying side, you'll be having 10 lots or 20 lots and 30 lots on the buying side. But on the sell side, you will be having really nothing, very less volume would have been transacted, hardly 1 lot here and 5 lots over here and some 7 lots over here. So at the day high, at the extreme high, right? So the volume on the sell side will be really running low over here compared to the buying side. Whereas here, if you consider this particular block would have been come up with some bigger volume. Probably that here would have been 100. And this side would have been something like a 50, right? So something like a 50 in case of 50 lots would have been transacted, and 250 lots over here on the buying side. So means these are coming up with high liquid zones, whereas on the top we are running out of liquidity and we are running out of low volumes. So it is also one of the characteristics where I say like less volume of imbalance zones. It's an imbalance, still it's an imbalance at the top, but the volume transaction is getting very less and less, which you can be able to see from the order flow blocks, right? But at the lower end, there are a lot of imbalance zone which happens with a decent liquidity, probably 75 and 50. It's still an imbalance, but you find more and more volumes are getting transacted at the lower volatility candle, lower end of the volatility candle compared to the high upper end. The upper end will be resulting in a lower and lower volume, which is also a sign of an exhaustive high. Most of the exhaustive highs are not tops, but they are very close to the tops. So that is where you have to understand, if that exhaustive highs are coming up with with the trapped buyer volume. So at times it can come up in the form of an trapped buyer volume also. So that is also one form of an exhaustive high. So you'll be finding an trapped buyer means it comes with an extreme big quantity. One particular block will have 1,000 lots. That is also kind of an exhaustive high where price immediately it turns negative. The fourth way is like it comes with delta divergence. Delta divergence. Right? So these are the real places where one have to be stepping in, and so those are the places one can go and catch those falling knives. Exhaustive markets tend to take a break first, and then mostly it forms a delta divergence, which we explained some time back, and it takes a little bit of consolidation, and then a delta divergence occurs, and so one can step in to take a trade over there. Okay, so yeah, I think we can take some couple of questions over here. Maybe what I'm going to do now is I'm going to unmute everyone and I'm going to ask questions. Yeah, now you can unmute yourself and you can ask questions. Whatever we had spoken so far, we already discussed on a variety of topics now since the morning. We talked about the concepts like strong auctions, weak auctions, volatility, initiative. Yeah.
So one question I had, Mr. Rajendra.
Yeah.
So yeah, means yesterday also I asked you. So you said that tomorrow you are going to talk about. So how will come to know whether it's a new business or old business are getting out? That's what my concern.
See, if it's a new business or an old business, one can really look from the profile perspective. One cannot, one will not know from the order flow perspective. Yeah, if there is a delta positioning which is happening, right? So the delta positioning is where one can understand whether it is a new business or an old business. If it's a delta positioning is happening, and again price is again returning back to the same level, right? So let's say delta is one form of a new business. One form of new business where a lot of players are getting positions over there, and let's say the price moves up, and again when the price is returning back, if you're going to see an absorption, that means again they're initiating, it's a new business where a new business formed over here, and again players are coming in accumulating, so they are in accumulation mode. That is the reason you are seeing an absorption. It's really kind of an the players are responding to the delta positioning levels, but instead of that, if they're going to unwind, if you're seeing a lot of volumes are going to happen and the liquidity is going to run dry, what you'll be seeing is a delta unwinding. That is a liquidation of old business. The old money, the old buyers are getting out of their positions. So that is one place where you can look into it. Otherwise, from the market profile perspective, you can get a lot of such concepts where new money enters, old money exits. So that in market profile we'll talk about it. In the afternoon session we'll talk about it, about the new money buying or old money selling.
Sir, I got one question, sir.
Yeah.
Sir, regarding support and resistance, sir, how do we check it in order flow, sir?
So one of the things which I talked about is the zero level, and another one I talked about is the delta positioning level.
Okay.
Do you able to understand from the if it's a delta positioning level, that is one of the level where we have to watch for a support.
Okay, sir.
Right. So I'm going to repeat the same thing again and again. It's like, so let's say the delta is getting positioned over here. Players are getting positioned. You understand what is the delta positioning, right?
Yes, sir.
What is the delta positioning?
People who will accumulate, consolidate, or absorb.
No. The delta positioning is like where more players, like if you look into the order flow, you'll be seeing on the sell compared to the sell side, the buying side will be having more volumes, 234. Let's say 234 on the buy side, and say 300 lots on the buy side again. You'll be seeing in packets. Mostly they come in the form of a package, like 400 lots.
Okay, sir.
400 lots. But compared to the sell side will be very weak. Let's say the sellers will be some 120 and some 75 or so. So they will be mostly coming in blocks. So means bigger players are adding to their positions. Bigger buy players are adding to their positions. So and then the price moves up. So while they're returning back, you're going to see a lot of absorption. More and more volumes are happening, and again they are pushing it up. That means the players who are bought in the same location, they are observing and they are pushing the price up. So if at all you're not seeing such kind of absorption, instead you're going to see a consolidation. What is a consolidation? Consolidation will eventually result in low volume, no imbalance, right? So and then it will be resulting in a low volume, where the volume is getting thinned out now, where the lot size transaction is getting 10 lots or 5 lots are getting transacted in a particular candle. There is a possibility that zone is more likely to break now, because now almost all the liquidity is now running dry. There is a fair chance of people getting unwinding over there. So in that case, those levels could break. Otherwise, it could act like a potential support zones.
Okay, sir.
Yeah. So that kind of zones only you can go and measure. You whenever there is a delta positioning happening, you draw a zone over there. It is not a support zone, but when the price is coming there and you are seeing an absorption, that will act really like a support zone.
Okay. So when we are checking the position, delta positioning, we have to check whether it is accommodating absorption or consolidating.
Yes, exactly.
By that way, we can have that.
If it is absorption, then it will act like a support zone. Otherwise, it is not.
Okay, sir.
All those places where the decision has to be taken live.
Okay, sir.
Yeah.
Understood that, sir. Thank you, sir.
Hello, Mr. Rajendra.
Yes.
Can you hear me?
Yeah, I'm able to hear you.
Yeah, my question related to the settings of order flow. Can I go ahead?
Yes, please.
For Bank Nifty future, my indicator lot size should be 20, brick size should be 40, and then bid-ask imbalance should be 10. Okay.
See, it depends upon person to person again.
Okay.
The pure size what we are setting here. So let's spend some quiet time on how to do the settings. How I do the settings, it differs from person to person, because some people, their time frame is really a bigger time frame. Let's say I'm watching on a 15-minute time frame charts.
Okay.
So assume that I'm going to push Bank Nifty to 15-minute time frame. Bank Nifty is kind of a bigger volatile stuff. So I mean high volatile instrument. So let's say I'm a positional player. I want to monitor what is happening on a 15-minute time frame. In that case, you see every time I cannot squeeze and then I cannot see compress. So what I'll be doing is that I'll be taking a bigger block size instead of putting an. I'll say like I'm going to put a brick for every 5 points block. So in that case, I'll be saying like 5 into 20, it becomes 100. Right? So I mean that this 100 will be multiplied by 0.05. 0.05 is the actual tick size. So when I say 100 into 0.05, that will be resulting in 5 points, right? So, so now each and every block I'm going to see, every 5 point block I'm going to see here. So in this case, I'll be able to track bigger players even more with a better visibility, right? So now in this case, I want to put a filter. Let's say I want a filter of 1,000 blocks. So I'll go and put the filter. Like I want to track the bigger quantity over here. So instead of earlier I made it as 250. Now let's say I want to make it as wherever 500 lots are getting traded at every 15-minute interval. Show me only those places. So
below 500 not shown. Okay, right.
Before?
Below 500 it will be not shown.
Those levels it will not be highlighted.
Okay.
Or there is another way to do that. Probably if you go to the indicators, let's say I don't want to see any other places. Show me only the places where 500 lots are getting traded. So that you can use that filter data by trade size, and you can really put 500 over here and apply it. Every other places it will show 0. Only wherever the bigger transaction is happening, only at those places you're gonna get. Other places you're gonna get the candles. But you can see that there are really wherever it's 500 is getting traded, only that candle you're going to see as an order flow block.
Okay.
Right? So again, it's one shot 500 got traded. So it's not an there are many places a lot of transaction happens. Initially it will be 20, again 30 will be getting added up, again 100 lots would have been added up. End of the candle, there will be that particular price 500 would have been traded. But here one shot 500 would have been traded at that price level. So that's what that filter size which really talks about. So these are the places one shot where the activity was happening.
Okay, big players can be trapped in this way, no?
Yeah, big players can be tracked in this way.
Tracked in this way. Okay, and what for Nifty future, Rajendran?
So now I'm going to give a template of it, but now I'm just really explaining how to do the setup, right? So let's say if the Bank Nifty is getting even more volatile, let's say in a day Bank Nifty is moving 500 points, which you can decide from the ATR. What is the current daily ATR of Bank Nifty?
250 most probably.
250 points. On an average, Bank Nifty is moving to 250 points. In that case, I think like even a 5 points is a decent range. Let's say tomorrow the ATR is going to 500 points.
Right.
In that case, you have to increase the TPO size because the range is as the range is gonna get bigger, it's more difficult to process a bigger information. In that case, you have to even move to 200 and say that like the 200 every 10 point. Each and every block is now 10-point range. So within that 10 points, 969 lots is getting traded.
Okay.
Right. So again, this is a different set of context. This usually works on a high volatile range.
Okay.
Right? Otherwise, you're going to see a less and less of information. If you're a very short-term player or you're a scalper, right? So if let's say I'm a scalper or an intraday player, I prefer to use a lower TPO size, something like an 40. Which is every two blocks I'm gonna interpret, because my interpretation is very minuscule, because I'm just mostly looking for 40 points or 100 points kind of an opportunity. In that case, I will try to keep as low as possible. In that case, I have to process a lot of information, right? Whereas if you are not a fast player, right? So fast player get in, get out of the game. Whereas a slow player, they want to take a lot of time to process, digest, and then they want to take a slow trades, right? So some people are fast trader, like especially the people who are with 20 years, 30 years old, they are mostly fast traders. And especially the players who are above 45, 50, they cannot act really fast all the time, and they don't want to act fast also, first of all. So in that cases, probably you need to have a bigger size. Probably in that case, your indicator settings has to be somewhere around instead of a 40 brick size means 40 in 2.05. That is every 2 point you're gonna get an information. Whereas if you don't want to process like that, you are a slow player. Probably you have to think about something like an 100, where every 5 points block you're gonna see every 5 point range it's gonna record the buyers and sellers activity once.
Okay.
And for different instruments, I have I'm going to share a PPT to everyone as well. I am having an template which really explains. So here is the template over here. Just give me a second. The template is taking a bit of time. Where I get the templates. Not here. Okay, anyways, I can give you the guidance over here for something like a price level of anywhere between less than 100 points, less than 100 point range. So something like let's say Arcam or Unitech kind of symbols.
Okay.
Where one can less than 100 points or 100 rupees stocks. If the tick size is 0.05, then the TPO settings should be 1 point. Means every 5 paise. Every 5 paise, you're going to get an order flow block.
Okay.
Right. So if it is anywhere between 100 to 250 range, price is between 100 to 250 range. In that case, I prefer using something like an something like an ICICI Bank, even let's say even 350 kind of levels, or stocks like S Bank, which is around 217 levels. Where we use 2 point brick size, which is nothing but every 10 paise, we are going to record the order flow bricks.
Okay.
And something like an anywhere between 500 to 1000 or 2000 levels, something like an Reliance, we go with an 25 paise or 50 paise. So 50 paise. So there is no rule that you have to use this, but to process these kinds of information, you need some sort of an optimal setting, right? For Reliance, every 50 paise movement is a fair TPOs, right?
Yeah.
So whereas the same thing, I cannot do it for Arcam, because Arcam itself in a day it moves only 50 paise or 30 paise, in fact. Even 30 paise,
according to ATR should be okay, na?
Yeah, one can go with an ATR level also. Mostly it's okay to set with ATR levels.
Suppose I'm an intraday player and I'm using 15 minutes ATR, that should be okay.
Not 15-minute ATR. Mostly the ATR you can watch from the daily ATR.
Okay.
So for example, if you want to know how to watch from the daily ATR, what one can do is that go to your NinjaTrader. So let's say Nifty, end of February. So go and get the daily charts.
NSE should be there. Okay.
So in my case, I'm having only so I don't have really big candles.
Okay.
And again, right click, go to indicators, pull out the daily ATR. Probably if you're using True Data or Global Data Feeds, you'll be able to get more candles and your ATR values. So take the default ATR settings value. Probably the ATR default settings are 14 points. 14 period ATR. Apply it. And now you'll be able to find the range in Nifty. So 125 points range. So 125 point range means you can use a TPO size of anywhere between 1 or 2. It should be sufficient. One will be having a lot of information, whereas 2 will be having very minimal. Only half of the information will be there. Okay. But yes, the volume levels, nothing will be changing. The only instead of having one block, you'll be having now 2 blocks of information if you're going to use a lower brick size.
Okay.
Right, but yes, as a short-term player, as a very short-term scalper, or as a pure intraday trader, I need those tiny informations. So I will try to keep as low as possible. So I generally prefer using 1 for Nifty, and for Bank Nifty, I prefer using 2. Because Bank Nifty is very volatile. It's tough to squeeze the charts all the time and then compress. Most of the time, you will be compressing and expanding the charts. But if you don't want to do that, always prefer using a higher TPO size.
Okay.
Yeah.
Okay. And lastly, one question, Rajendan.
Yeah.
I'm using Bell TPO for last 25 days, most probably.
Okay.
Okay. And I'm saying that every time on RD alert, every time by default target around 40 points there. So what's the logic behind this 40 points in Bank Nifty?
So let's talk about the RD long and RD setup here. So probably you can mute yourself. I'm going to explain.
Yeah, sure.
Right. And so the RD long, it's also one form of a signal like it's one form of a signal like momentum auction reversal. RD long and RD short also looks for a momentum exhaustion setups. So one of the examples here, which I'm going to show you. Okay, here is the actual order flow settings, which I prefer to use, especially for symbols like Bank Nifty. It used to go around in this band. So approximately one can consider using even 100, but I prefer using 40 because I need more information. I use 40. For symbols like Nifty or Bank Nifty, anything about 20 to 40 is a preferred one. So that means which eventually result in 1 or 2 points. Whereas for Bank Nifty, one can use either 2 points or a 5-point range. But accordingly, based upon your different price size, one can define the one can really define what kind of TPO size they want. If you're not comfortable with that, always you can move to a higher level of TPO size. So there is no definitive rule like you have to set the actual TPO size. Right now, let's talk about the R delta long and R delta short, which is also one of my favorite setups for identifying a momentum reversal. So when you're playing R delta long or R delta short, so let me go to that zone. So an R delta long, when we are talking about R delta long, it is a zone where the sellers are getting exhausted. Probably you are getting an R delta long alert or something like here. So while watching the charts, you'll be getting an R delta long over here. This alert will get generated on the close of the candle, right? So what is really happening inside the signal is that we are looking for a pattern which is mostly from the delta values, where the candle itself, the candle hits the day low, and the price of the candle closes positive. Price of the candle closes positive. Means price was coming down, and their candle is really getting positive. One of the candle is a positive candle. So this candle is a positive candle, but the delta really goes negative. Delta goes negative. Minimum delta is negative. Sorry, the max delta is negative. So what I'm trying to say here, minimum delta is negative and the max delta is 0. So what does that really mean? What does the max delta really mean? What if the max delta value is 0? That means right from the start of the candle, the delta was negative and it is staying negative. It never went to positive, but the candle was closing positive. That is the interesting thing there. That means the sellers are getting exhausted, right? So what was, if I try to draw the picture here, if I try to draw a picture over here, what is happening here is that candle was closing positive in that candle. But if you look from the delta perspective for that entire candle, delta starts at 0, but it was going down. It was going down, and lately recovery comes. But still that recovery, it making the price to close positive. That recovery is making the price to close positive. You're getting a positive candle over there. But if you look into the overall delta was negative. Max delta was 0. So that means right from the start, the delta was 0. Minimum delta is also negative. So means delta went down for quite some time, and lately there was a recovery, but it was not able to recover above 0 any time. That is how the most of the R delta long signal looks like, and that is one form of momentum exhaustion setup, and where you're gonna get an RD long signal over there at the close of the candle. So what one can do is that you can take a stop, wait for a little bit of pullback, and enter your trade over here. Probably you can expect wait for 2 points or 3 points of pullback. That is why your stop loss becomes 5-point stop. And we practice this R delta signals not on the 5-minute bars. We usually practice on a range bar charts. And typically, when I'm talking about range bar charts, I will be using 8-block range, right? So let's say I'll tell you how to set up for Nifty and Bank Nifty, and for any kind of stocks, how you have to set up. Typically, when we are talking about the R delta signals, right? So
can you be a bit loud, Mr. Rajendran?
Yes.
For the past 1 hour, it's been very low voice. Actually, please be a bit loud, and please repeat the volatility concept, right?
Yeah, I'll repeat the volatility concept as well.
Please
First,
be
let
a
me
bit
explain
louder.
the R delta. First, is it okay now?
You can be a bit loud, or else you can use a mic.
I'm using the mic. Whenever I'm conducting a session, I really use a mic. Is it okay now?
Right.
Okay. Is it okay?
Here. It's okay now.
Is it okay? Okay. Means I increase my pitch a little bit louder now. So when talking about the R delta, right? So I prefer to use a range bar chart. So how do I use a range bar chart? It's pretty simple. So first of all, if you haven't used the range bar chart, what you have to do here is that first you just go and type range, let's say 200 R. So here, when I type 200R, the 200 will be multiplied by 0.05, which is the tick size. And the 200 into 0.05 means typically how many points? 100R is 5 points, so 200R means 10 points. So that means every 10 points, a candle will be plotted. Within that 10 points, the high and low is measured. Always the high minus low is always 10 points in case of an something like an Nifty futures, right? Whereas I'm talking about 8 bricks. I'm talking about what? 8 bricks. So let's do a little bit of math over here. If my brick size for Nifty, let's say if it is 10 points, so 1 point brick. That means my settings, my order flow setting is what? Order flow settings, how much I have to key in? I have to key in 20. That means 20 will be multiplied by the tick size 0.05. That is the tick size 0.5. That is the tick size. And the end result is 1 point brick. Right or no? 1 point brick. So to set the range bar charts, we prefer always 8 blocks. 8 blocks of range. So what you have to do is that you have to multiply the 20 into 8 range bar charts. 8 blocks you will be getting an 160R. So I had to key in 160R. Let me key in 160R. So all I have to do is just simply type 160R and enter. You'll be getting an 160 range bar charts. Now on top of this, you apply your order flow indicator. So right click, go to the indicators. First get the range bar charts ready. First do all the calculation and get the range bar charts ready. And now scroll down and go and get the Bell R Delta. That is one more add-on package which you will be able to get. Bell R Delta. Right, so and set your brick size as 20. So 20 is 1 block. So that means for 8 block we plotted 160 bar range. When I apply it, it usually results in 8 block range. Right, 8 block range. This is where we are gonna look into the RD long signals or RD short signals. So I do a quick settings again here. I'll go to indicators. I put the lot size. I'll key in the lot size as 75. So 75. Apply. So let me check are there any signals lately. It's mostly a scalping tool where it's only for the pure intraday setups. So recently there are a couple of RD short signals, right? But at the same time, what we'll be doing here is that we'll be combining with one more indicator called Bell Trend Analyzer. So there is a Bell Trend Analyzer also over here. So let me watch one more indicator. You have to really get the Bell Trend Analyzer as a filter. Let's say Nifty February futures. Take a daily chart. Apply, press OK. Right click, indicators. Go and get Bell Trend Analyzer. Apply it. So it is kind of an oscillator, which is a smooth and responsive oscillator. And this oscillator, if it has been positive for the day, then you're going to get only R delta longs. You're going to ignore all the R delta shorts, right? So if in this case, if there are R delta short is coming in, we're going to ignore, because the green lines are nothing but this is Friday's value. Friday on a Friday it was maintaining green, and again last Thursday also it is maintaining green. Last Wednesday is also maintaining green. So if there are any R delta short is going to come, we are going to ignore those trades and we are going to play only R delta longs over there, right? So And those are the zones where you're seeing negative. It's printing negative every day. The market's also falling. Those are the days we are going to practice only R delta shorts. If any R delta longs are going to come, we are simply going to ignore it because it's a very simple filter to ignore bad trades. And let's go back to the charts and really see if there are any R delta longs in the last 3 days. Maybe number of days. Go to data series. If I go to data series, I'll be able to say how many days I have to load. I have closely some 20 days of backfill data. I'll apply. Just do a compression. So if you look, there are a lot of R delta short signals are coming in, but if you look into the last 3 days, as I said, what was the RD, what was the trend analyzer saying last 3 days? So that is last Wednesday, Thursday, and Friday, all the 3 days, the trend is in buy mode, right? The trend is in buy mode, and all the 3 days, it is maintaining green. That means last 3 days, I have to take only what? Can anybody explain what signal I have to take? Should I take RD longs or should I have to take RD shorts? Yes, you have to take only RD long signals, right? So all the RD short signal, you're simply going to ignore. So all the RD signals which has got generated, right? So all the RD signals which happened in the last 3 days. This is the last 3 days of information which you are watching. So there is a RD signal which I am going to ignore. I'm going to ignore this RD trades. I'm going to ignore this RD trades. I'm going to ignore this. All these RD trades I'm going to ignore and ignore and ignore. What I'm going to pick up is I'm going to pick up only the RD long signals, right? So let's close. Let's look closer.
R delta means range delta.
R delta means reversal delta or Rajendran delta.
Hello.
R delta means reversal delta.
Reversal delta.
Yeah, R Rajendran delta, because I'm the one who introduced this concept.
Sir, when to exit, sir? When we are entering this?
I'll talk about it. So when you are looking into R delta long, first let's look into what makes the R delta long to get formed over here. It's one way of momentum exhaustion, right? So it's one place where you can find this kind of momentum exhaustion here. Let me zoom the charts bigger and let's look closely what happened over there. And let's spend little time to understand what is this R delta is all about. So in this case, you will be finding that candle was closing positive, price was falling, and the candle was closing. It was hitting a day. It was hitting what? It was hitting the day low. At the same time, your candle was positive and delta was negative. It is also one form of a what? Delta divergence. Is it a delta divergence or not? What are the conditions for delta divergence? It hits the day low, but the delta was, I'm sorry, it's not a delta divergence, but it is one form of a momentum exhaustion where it hits the day low and the delta was negative, but the candle was positive. The candle was really positive over here. And look into this pattern over here. There is a max delta. Max delta is 0, and the minimum delta is what? Minimum delta is negative. So the delta was negative right from the start. That is the reason max delta is 0 and your minimum delta is negative. Right from the start, only delta is keep on continuing with the negative values, but despite all those things, candle closed positive. It's one form of a momentum exhaustion. Along with that, we'll take a confirmation from the Bell Trend Analyzer, which shows that which side you should be trading which side you mostly have to take your trades. So where the win rate, the winning accuracy increases a lot, and if there is any failure, hardly 2 failures in a day, you are not going to take the third R delta long. So max to max, the target is all you have to do is that you place your cursor over here, and automatically it tells you where to take a trade and where you have to enter. So those are the places where you can enter and you can initiate a trade towards those targets. The targets are by default marked as a VWAP levels, the chocolate brown levels, where you can take a trade really in those chocolate brown color zones. Right, whereas an RD long will be mostly watching especially when the look into these zones, the R delta. So these are the negative day zones where the R delta, I mean the trend analyzer is maintaining negative. When those during those negative zones, you have to trade only R delta shorts. If any R delta longs are there, no matter what, whether it is profitable or not, we don't even look into those R delta longs. So let's have a couple of examples during those February 12, February 10, 11, 12, 13 till 18. Let's see any R delta shorts got generated. R delta shorts are exact opposite of R delta long. Let's look into the theory session first, then we'll look into the live charts. So in a R delta short, it is one way of where buyers are getting exhausted. It is a zone where candle closes negative despite buyers are in control. But if you look into the delta perspective, delta value is positive, and it is positive right from the start. That is why the minimum delta is 0 and the maximum delta is always positive. Minimum delta is 0 means always right from the start of the candle, the delta is positive, but despite that, candle closed negative. That is one way of momentum exhaustion occurs in the markets. And if you go back to the charts and check, so it throws you in the form of an R delta short signal over here, R delta short signal over here, and price tend to move towards the it does a mean reversion and it does move towards the VWAP levels. At the same time, the bell trend analyzer also should show a negative trend, that is a red histogram is what you have to read there on the daily charts when you're taking an R delta short. So let me go back and show you in Nifty chart how the R delta long. Typically, the mean reversion points are anywhere between 18 to 20 in a low volatile zone, and in a high volatile zone, the targets of towards the VWAP will be anywhere between 20 to 30 points. So probably if I go a little bit back, so typically these are the places where there are a lot of R delta longs are coming in. Usually you're going to ignore all those February 17, 18, 19 period. If there are any R delta shorts are coming in.
There are multiple RD longs. It is confusing now. How to minimize it?
No, first let me talk about it. First let me talk how to take the trades over here. Okay, so let's talk about a couple of R delta shorts which are coming in. So let's take about this R delta shorts over here. So let's study this R delta. Then we will look into failure patterns also, how the pattern fails. So look into this candle. Price was going on the upper side. It was an uptrend, and then one place where you can find that the minimum delta is 0, max delta is positive. Means right from the candle start, the delta was maintaining positive. That is why the minimum delta is 0, right? And the delta is also ended positive value. But despite that, look into the candle. The candle was negative. I mean, the candle was negative on that place. Kind of a momentum exhaustion where you can look for, and once the candle closes at 2 point or 3 point higher, you can consider initiating a trade towards the. So that is where, since it is a 5 block, since the entire block is 8 points, your maximum stop loss is 8 points. Your maximum possible stops is 8 points. So your stops are kept over here. And so you can initiate a bracket order, as simple as that. You initiate a bracket order and then leave it to the markets, so that either your target is hit or a stop loss is hit. You are done for the day here. So you click on this level, so automatically you will get the levels, and possibly you will be having an TP take profit levels. Those take profit levels are kept at the VWAP levels. So ideally the VWAP is the reference level where one can wait for the price to go and really hit those levels. But there are cases where you might find failures also. So sometime back, the failures like, so look into this example. It was coming at the opening of the candle itself. And if anything, if any such signals are coming after 2:30, kindly ignore it. We don't take a trade anything above 3 o'clock or such. Probably here in this case, it's coming at the opening of the candle itself. So in this case, you can see some of the signals are coming after 3 o'clock. So 3 o'clock, if any signals are coming in, tend to avoid it. In this case, this is a failure pattern. But not much volume got traded over here. So I think we can ignore it. It mostly because of it's all are zero level. So we can simply ignore this level. Let's try to check where some other places where it got failed. So this wasn't hit, and but that comes after close of the candle, so it is an ignore. Think about this place. There are two places where it got a failure, right? So let's talk about this. So think about this case. There was an R delta short formed, and then the close of the candle is where the entry point comes. So the close of the candle is over here, and wait for a 2 points pullback, wait for the trade setup to happen, and that is why your stops would be around how many points? 4 point stop. The 4 point stop, you're done with that stop, you're out of the game. And again, there is one more short setups are coming in, one more short setups where you're initiating a trade over here, and it was instead of mean reward, it's trying to mean reward towards the VWAP level. The VWAP level was really around 10,800, and instead you're getting stopped out over here, and you have to really step away from that. It's okay to lose such kind of small points, but when it comes to the risk reward ratio, it usually has an stops around a 5 point, 6 point range, right? So, but the reward will be usually around 18 points or 20 points in case of Nifty futures. We really got many people started working in Maruti, and most people, they regularly start playing in Maruti on R delta longs, and some people are even trying out in crude, and we got a lot of positive feedback on crude. And many people, they used to play in Bank Nifty and Nifty. These kinds of momentum exhaustion patterns gives a very tight risk, and where the target trades are always towards the VWAP levels. And there is also one more setting over here. Like if I go to indicators, there is one setting here around so R delta POC alert, right? So there is an offset. What does this measures is what makes you to generate very less amount of signals. If you really don't want more signals, if you really want very less and less signals, what you can do is that you can increase the point levels. As of now, it is by default, it is set at 0.15. It is in terms of percentage. So that means when the R delta short is getting generated, and by that time, it will look for where the VWAP level is. If the VWAP level distance is 0.15% from the R delta signal, then it will consider. Or if it is happening very close to that VWAP level, it will tend to ignore that level. So there are many places these kinds of minimum and max delta happens. But to remove those signals, if you really want, let's say I want to play a bigger opportunity, show me only 0.2%, only those R delta signals, show me, so that my target is 0.2% of the Nifty always. So let me apply over here. So in that case, it will generate very less and less signals. compared to earlier one. Or if you still not okay with that, you can move to 0.25. So let's say 0.25. I'm gonna plot here. So in this case, you're gonna get very less and less signals because it will always look for zones which is 0.5% away from that. So all these are all delta shorts. So anyways, we don't have all delta. The bell trend analyzer is maintaining positive. No signals over here. So this will generate really very less and less signals over here. So but 0.515 is where we can look into that. So in this case, look into this example here. This is on 14th of February. The 0.25 means typically 30 points target. So if I click on this level, your entry point, from the entry point, the stops was how many points? 4 points. But towards the target was around 10,778. That is closely around 30 points, right? So 30 points is the target and stop is like 4 points. Let's say the other day, what is happening here? The other day also on 14th, the next day is, what is the time? 15th of February. If you look into the 15th of February, the bell trend analyzer was negative. So if there is any short setup is happening over here, short setup is happening. I think one short setup I had seen that it is also failed. There is an RD long, but we skip RD long signals. A lot of RD long signals are coming in, but we tend to ignore because that particular day we are getting what? A lot of RD signals are coming in. We generally don't take it. And 18th, it's coming at opening of the bar, but we see that opening of the bar really don't have any volumes. So that is also an ignorant. So when there are no volumes really happening in that candle, it is also, we have to ignore it. It usually happens because the price moves really faster over here. So at the open, price moves faster. That's why it's a range bar charts, no real volumes. So we don't really treat that as a signal. Even though condition matches, there is no real volume happen on that particular bar. So that is also skipped. So let's move a little bit further. There are no real short signals because we kept an 30-point range. Number of signals will get reduced over there. But if you get a 0.15, then definitely will get more and more signals. So there is one RD long here, but still this day is on a negative trend day, so we tend to ignore it. And there is again one more RD short which is coming at the open. I believe this is also no volume got traded over here. So this is also an ignorance. This is also one we have to ignore it. So there is no real volume is happening over here on 19th of February also, right? So, but I would say that if you want to go with the settings, go with the default settings. Always go with the default settings. And you can control all those take profit levels. So 0.15 is the default settings. Which will be ideally looking for 20 points range in Nifty, 15 to 20 point range with a stop of 4 points. That one can easily place a bracket order and then you can leave it to the system.
Rajendra sir?
Yeah.
Just one observation which I observed, the RD long and RD short.
Yeah.
You get RD long only when the price is below the VWAP, and you get
RD long
short
is only below the VWAP and
RD short is above the VWAP.
Yes.
Even though the price may be going up or down on the other way. Yeah. That's what I've observed. Maybe is the signal settings done based on those VWAP?
Yeah, it's based on the VWAP only. From the VWAP, it should be minimum 0.15% away from the VWAP.
Okay, all right.
It's
Thank you,
it's
sir.
mostly decided based on the VWAP. And we need to have an VWAP and then momentum exhaustion in the form of an RD long and RD short. So that is where you can go with a tight risk of 4 points.
Thank you.
Right. So people already practice in Maruti. They already practice in crude. And if you want to check with the Bell TPA people, they have more case studies with the clients. Okay, so that's with R delta. So I think we are really extending the session here. We'll come back again by 2:30, and we can again start talking about. I think most of the order flow concept has been over now. The basics of order flow concepts is over now. Now we really touch base. Some of the order flow concepts combined with market profile. That's what we're going to talk in the afternoon session. Maybe we start by 2:30 and we go until 6 o'clock, right? Is the voice quality still low or how it is?
No, it's okay. It's very good. Yeah, last 2 hours it's very good. Okay, so sir, means when the Bell TPO is going to launch MR for order flow?
I don't know. You have to ask Mr. Vinod. I think probably they are planning in next week or so. They're trying to plan. Fine. So we can take a lunch break and get back by 2:30. So 2:30 actual timing is 2, but then we'll start by 2:30. Right. Thank you.